So divided by US 13, what does that mean? Divided by us 13. I don't know what that means. Oh, the trade. Do I have to split it with all of you guys? Is that what you're saying? All it was price reach resistance, termination condition, pushed back all the way to support. And when it came back into resistance, it was super, super weak. So guys, I took one shot at it and I took a close below my small triggers. I got to the right side of my momentum indicator right here. And then when it came down and pushed back up, this was my HVA short. That was an add-on, so I was short 6, put 2 more on, and I got out right here at the divergence low because it lined up with an HVA line. That's all it was. It was taking advantage of a great top. Look at that top, guys, and we're going to talk about it. Has anybody ever seen this look before? I don't even know what a plateau of divergence means. Broken record. Guys, does that look familiar, that pattern? Where is your plateau of divergence? Right here? Is this the one, Cav, that you're talking about? Let's talk about it. If that's the one it is, I definitely want to talk about it because this is an awesome pattern. But before we do that, guys, let's get into the basics of what we do, and let's talk about the kind of the direction that we're headed today. It's the direction that we're headed every day, guys, towards consistency, towards being a chart reader, towards understanding what your indicators are telling you so that you can capitalize on it. And we're also going to talk about the difference between a chart read and following rules, because they're two very separate animals. The chart read tells you that your rules are met. So we trade rules, guys. They provide a statistical advantage. But the first advantage that we give ourselves, and I love this, is just understanding when news is going to be. Today is Thursday, March 7th, and at 8:30 a.m. we had unemployment claims, high impact. It moved the market a little bit. It wasn't too crazy, but it did give it just a little shove. At 10 a.m., guys, Fed Chair Powell is going to testify again. This is 2 days in a row. Hey, good morning, Roku. So at 10 a.m., actually at 9:55, I want all of you to have a big note on a piece of paper, or maybe a timer with Siri or something that says, man, Powell's talking at 10, and when he talks at 10, I don't want to be in the middle just in case there's a reaction. And then at 11:30, Mester speaks. That's medium impact. So guys, every morning I'm coming through and I'm checking news, making sure that I'm not trading into it. And if you're trading one of those prop firms, Apex or something like that, they'll tell you don't trade during news. And they'll even tell you that if you get lucky and have a windfall during news, they're not going to pay you for it because it's too risky. They're not looking for bravado. They're looking for consistency. So understanding when news is really creates an advantage. Looking through my names, it's good to have some of you guys back. I don't see any new names yet. VM Tech, welcome. I was looking over your pictures this morning. I'm excited to talk about them today. And I'll tell you what, if you've picked that much up just from videos, you're going to be unstoppable here in the next couple weeks. Pretty awesome. Hey, Chris, good to see you, man. I hope you got it. My apologies for missing your message the other day. Didn't mean to ignore you, but you caught me after class started. Just a heads up, guys, if you ever send me a message after class starts, I probably won't get it till class is over. And I do apologize if that ever happens. Everything that I talk about, guys, is right here at the Nexgen tutorial section. All the rules that I talk about, all the looks associated, all the patterns that we recognize. There are zero secrets with Nexgen, and I think that's one of my favorite things about it, is I'm not put in this awkward situation where I give you just enough to be dangerous and then sell you the rest, right? Even on the demo, you have a full working copy of software. You have NinjaTrader up and running. You have the ability to simulate the market live. And then the most important thing about what we do is you've got 15 hours live every week to request feedback on anything and everything that you see in the market. You can request feedback on any questions that you may have. If you are learning to trade a different market, if you're learning to trade a different pattern, you can present that in the classroom. We will discuss all of it, I promise. All you have to do is participate. So the tutorial section's where everything that I talk about comes from, but I've kind of put it together in a cool little slideshow, and I'm really digging the slideshow. I hope you guys like it. It's a little different presentation than what we had, but I think it keeps me from jumping around a little bit. Those of you that have been with me long enough, you understand that shiny things confuse me, and I'm notorious for digressions, and that's okay. It's the artist in me. Hey, um, but when we talk about just really your path, um, there's three skills that I'm going to help you master. Nexgen will help you master. You're going to hear it from all of us. The message will always be consistent. But chart reading is the first thing, guys. Chart reading is what you've got to figure out before you really go into anything. Chart reading is going to help you understand where the market is likely to go, where it's likely to continue, where it's likely to stop. And guys, I want to give you a great example of understanding where the market is likely to go. Those were profits from this morning. I exited on the low tick. And this doesn't always happen, but when it does, it's pretty freaking rad, and you should take a picture of it. Because you're going to be able to look at your market and you're going to say, my indicators say that this is the most likely option. And then when you begin to trust your chart reads, you find yourself holding for that best option. I just wanted to share that one. Maybe it's a little bragging, I'm not sure. But you're literally going to know where the market's likely to stop, guys. My short on the NASDAQ, I knew exactly where trouble was, and I was able to exit that one, and that was the same thing. So we're going to focus on chart reading because chart reading is 90% of your day. It's literally going to give you everything that you need to look for trades. And chart reading is just something that happens. It happens through repetition. It happens through practice. And even if you don't wake up and say, I'm going to be a better chart reader today, if you practice, if you simulate, if you talk to yourself in terms of advantages, what you'll find is that you're going to anyway. It's going to happen by default. From chart reading, we're going to discuss trade entry precision, and we're going to discuss it on a high probability trend trade. Same trade I talk about every day, guys. And I'm really excited to add in your momentum trades. I like what you guys are doing with momentum trades. I take them as well. I love to study them, and I love to talk about them. So you're going to hear the foundation trade, which is a high probability trend trade. It's a trade where each indicator on every chart agrees for the trade. It is the happiest of happy and the best of the best, and it's the one that you need to learn so that you can learn to read your charts. And then from there, it's going to open doors and having you do whatever it is that you want to do. But trade entry precision for the high probability trend trade is our first focus every day. And then once you learn to get into the market, once you're comfortable taking the best entries, you're going to have to learn to manage it. I'm going to tell you right now, your ability to manage is very dependent on your ability to read a chart. So don't try to get rich before you understand the process, right? Don't try to hit the home runs until you can pick off the base hits. And what you're going to find is very simple, manageable goals, small financial goals in the beginning. Take the stress off of you and make it easier for you to move forward. So as I do every day, I'm going to remind you, if you really want to be consistent, if you want to be confident, if you want to be good at this ASAFP, guys, there's two ways to do it. And the first one's posting your trades in the room. Everything that you do, put it in the room, guys. And all we're going to do is talk about advantages. I'm not going to ridicule you if you lose. In fact, I'm going to praise you probably because you're going to come out of it smarter, and I'm going to be excited for you. So show me everything that you do, win, lose, or draw. But the most important thing is tell me why. Tell me why you did what you did. I want you to describe what you see on the chart and what about it compelled you to take the trade that you took. I want you to show me where you entered. I really want to see where you exited too. A lot of people love to show me great entries, but we don't see what happens after the move, and that becomes important because the entries are the first step, but management is the second. So we can really dig into it if you give me 15, 20, 30 bars after your entry so we can see what happened. The more information you give me, the better the feedback is going to be. We're going to talk about the high probability trend trade, guys, but the second half of getting to where you want to be is utilizing the spreadsheet. Nexgen gave you the spreadsheet. I'm going to give you mine right now. I share it every day. I haven't added to it much lately because really the goal is that you build yours. I want one of you guys to share your outstanding page with me. But the spreadsheet has 3 tabs. The spreadsheet has your copy of your trade tracking, where every trade you take, you're going to put in here. It's just a trade journal. As you develop a plan, there's a section called Favorite Looks. So each time you take a rules-based trade, you take a picture of a rules-based trade, you historically study it, capture that image, annotate the chart, you're going to drop it into your trade setup looks. This is what it's going to take to get you into the market. And then finally, under client trades, guys, I've got about 300 pictures of you guys being brilliant with the software. I've got entry sequences for the high probability trend trade, both long and short. I've got a very methodical, mechanical management plan for the beginners over here. There's a lot of ideas on NASDAQ. I know that everybody wants to be a NASDAQ trader because it's exciting, but if you're not a chart reader, the NASDAQ will chew you up and spit you out. There's a lot on management. And then there's a lot on just patterns that repeat themselves. That was the picture that I took this morning, and you guys are going to be kind of floored when you see it straight from the manual. And then a whole bunch on termination conditions, places that can stop the market. Because the new user typically gets so excited about being in a trade that he'll ignore the big red flags that say, don't take this next one. So there's a whole section dedicated to that. My hope and dream for you guys is that your favorite looks section ultimately looks like the client trade section, that you take so many pictures with so much annotation that you're going to fill up your section. You're going to have hundreds of ideas of what it's going to take and how you're going to do it. But the key is every morning, go back to your trade journal and study it, brief historical study. Ask yourself what worked, right? Because that's what you're going to repeat. Man, every time I traded with overwhelming momentum and nothing in the way, it was so easy to win. Or you may say, what didn't work? Every time I traded into one of those termination conditions, it seemed to take my money from me. So I'm going to focus on momentum. I'm going to focus on nothing in the way, and I'm going to try to avoid those big brick walls that are termination conditions. And you'll find that it feels easy when it's right, and it feels forced when it's not. But every day, if you just go back, take 5 minutes with a cup of coffee and look at what you did yesterday. And of course, the better you annotate your charts, the better your study is going to be. It's just going to set you up for the day, guys, and it's such a valuable tool in the learning process. So we're going to learn the rules, we're going to talk about them, we're going to look at the advantages, we're going to talk about where they happen, what they look like, and what they should mean to you as a trader. While we're talking, guys, simulate. If you see something set up, take it. Take that trade. Even if it's the wrong trade, take that trade, right? But talk about, through annotation, right on your chart, this is what I saw. This is what made me take this trade, Mark. Am I missing something? Is my entry good? Could I do it better? Was my exit, does it make sense? Or could I have held for longer? But the goal is that you guys practice the correct rules. You guys aren't just trying to build up these simulator millions, because what you'll find is getting lucky on simulator translates into a long-term failure because luck runs out typically when you go live. We're going to simplify heavily. I'm a huge fan of less is more. We're going to talk about the high probability trend trade. I'm going to give you a rock solid plan for taking it, for managing it. And we're also going to talk about what's called a medium probability trade. And so the high probability means that everything's cool, everything's good. It's the best of the best, guys. I mean, it's just chock full of advantages, and it's difficult to find something wrong with the trade. The medium probability trade is most of your indicators agree for the trade. However, an issue exists. You're going to rely on your ability to read charts to identify that issue. When you have a medium probability trade, you're going to have to manage a bit more assertively. And then once again, your ability to read charts will allow you to manage assertively. When you know that there's trouble in the way, you've got to put on a different management hat. You've got to get to break even quickly, maybe take quick profits. So understanding what kind of trade you're in is going to let you understand how to manage it. So we're going to simplify. You guys are going to take so many pictures that your little clicker finger hurts. because you have to learn the looks so they're easy. And not everybody gets that in the beginning, but I'm going to tell you from experience that if you look at 300 pictures of people winning with momentum, you begin to recognize momentum and feel comfortable with it. When you begin to see people winning, entering at areas inside of triggers, you start wanting to enter at areas inside of triggers. And every time you annotate a chart, what it does is it cements that look in your brain and it makes life easy. So this is what we're going to do, guys. Don't forget, take pictures and write on your pictures. This is what I see. This is where I did it. This is why I did it. Mark, give me feedback because I want to be a better trader. And we're going to talk about the high probability trend trade. I'm such a huge fan of this trade because this is a trade that only has 3 rules. And these 3 rules, each one provides an advantage. So if you're a note taker, if you've got a big crayon in front of you and a piece of construction paper, write down, every time I look at my indicators, I'm going to talk to myself in terms of advantages. I'm going to talk to myself about whether or not I have momentum or a clear path or an entry area. And when that self-talk says that I do, well, then I have a trade. And only then do I have a trade. Because each rule provides an advantage. 3 advantages create a high probability trend trade. This is a trade that typically wins 70 to 80% of the time, guys. This is your path to confidence through the memory of success. And it only happens on 2 charts. So 3 rules, 2 charts, very simple. The large chart is molasses in January. The large chart is a slow-moving train rambling down the track, guys. The large chart is going to define the direction of the market. The large chart is going to define the momentum in the market. That's your first advantage from rule number 1. The large chart is also going to define any areas that may be problematic. Your ability to read charts is going to have you understanding where the market is likely to go. You'll use areas as targets. It's also going to let you know where the market is likely to stop. They're going to let you know when you've reached an area that may create a bounce or a reversal. Rules 1 and 2, when they're met on the large chart, are going to have you in a market screaming in the direction of the trend with absolutely nothing in the way. So when you have that, when the rules are met, when they're true, you're going to turn your attention to a small chart. And a small chart is a refinement process. And what it does is it takes this broad stroke of a brush that is the large moving chart, and it dissects that most current bar into 15 to 30 bars. And we use this. You're going to be able to define with really pretty amazing accuracy where the market is most likely to continue. And rule number 3 gives you this entry point on a smaller, faster chart, on a refinement chart. And by doing so, you're going to be able to reduce your risk dramatically. You're also going to be able to increase your profit potential, which is really kind of what we all want to do, right? So 3 rules, 2 charts, and everything starts with momentum. Guys, every trade that I teach, honest to goodness, is a momentum trade. They just have different looks. So momentum is the one rule I just want you to commit to never doing without. You'll see it in the room day after day. Momentum for the win. You're going to hear it all day long. I'm going to beat it like a dead horse in front of you so that you learn to believe that momentum for the win. That's what it's going to do. And you can't have momentum. It's impossible to have momentum if you're not trading with the trend, guys. So never fighting the direction of the market is the first advantage you can give yourself outside of the rules. If the background is green, the market's going up. You should only be looking for rules to be met for high probability trend trades long. If the background is red, the market's going down. How about we only look for rules to be met for high probability trend trade short? You'll notice that I didn't say if the background is green, go long. If the background is red, go short. There's a little more to it. But if the background is green, you're only looking for rules to be met for high probability trend trades long, for trading in the direction of the trend. And you can't have momentum if you're not trading with the direction, because the only way to have momentum is if your trigger lines are the same color as the background. Small triggers break above the large triggers. Both are green. The background's green. I want you to picture scissors opening, getting ready to cut. And when the space is created between the small and the large, you have strong triggers. And when you have strong triggers, the odds are favorable for the market to continue up. And then, of course, in a downtrend, when everything is pointed down, small triggers will break below the large triggers, and then there's those open scissors. The space between the two lets me know that the odds are favorable for the market to continue down. I'm a huge fan of language, guys. Language reminds you of advantages. Language keeps you focused on the best of the best. So when I have odds favorable momentum up, I'm going to buy Fibonacci support on a smaller, faster chart. This one bar on the large chart is 15 to 30 bars on a smaller, faster chart. You guys are going to pinpoint exactly where these tails are most likely to form. We do not trade tails on a large chart. We use the refinement process on the small chart to get us in at the best of the best spot with the least amount of risk and the most amount of profit potential. And then when the triggers are down, there's strength. We're going to sell Fibonacci resistance on that smaller, faster chart. So strong triggers lead the way, guys. Strong triggers are momentum. Strong triggers just really make things wonderful. And I want you to see it. Here's the NASDAQ right now. Strength in the move. The market continues up. How about if we buy Fibonacci support on the way up? Indecision. Triggers don't match, colors don't match, things get a little wonky, eventually it continues back up. Strong triggers, let's buy a pullback. And you're going to see this all day long. Strong triggers, sell a pullback, the market continues down to the next area. Strength, even without a pullback, gets you down to the next best area. And this happens all day long, and that's a big grinding move in the NASDAQ right there. But it began with odds favorable momentum. So it will behoove you, I love that word, to go back and look at these charts. Look at the large chart for whatever market it is that you're studying, and go back and see how often strong triggers push the market. Go back and circle those tails and get accustomed to believing in the fact that momentum leads the way. And momentum isn't a constant, guys. Odds favorable is the best of the best. That's what we're looking for to sell Fibonacci resistance. That's the one as the new user. Committing to only having the best momentum creates a huge advantage. But once you're a chart reader, there's opportunity all the way down. With both triggers down, when one of the small triggers is inside of the large triggers, that's the first sign that momentum is slowing. Visually, you can see it, right? Scissors begin to close, the blades are coming together. You can still take a short trade. You can still go with the direction of the market, but you got to make sure that your other charts agree. That's a chart read. And then when both triggers are still down, but they're inside of the large triggers, you have a weakening or a slowing of the trend. Anything can happen up or down. Guys, this is the key phrase. Anything can happen. It's a crapshoot. You don't have an advantage. You're kind of wishing, hoping, and wanting. So if you decide to take a trade without the advantage of momentum, it's so important that the other two advantages are still in place. It's so important that you are willing and ready to manage aggressively. And when weak triggers hit areas, look at this look. There is weak triggers into support and a big bounce, and then weak triggers even more so back into it, and it precedes the reversal. And guys, if you were watching the NASDAQ just a few minutes ago, into resistance, there's a pullback, super weak into resistance, down it goes. Doesn't this from an hour ago look a lot like this from back in May of 2023? And then even more so, this is where I just get excited about how much patterns repeat themselves. How about the same darn look from 2021? So what we're doing right now, guys, is we're learning patterns. We're learning how to recognize strength, and you're about to learn how to recognize when there's a problem in the way. We call those termination conditions. And rule number 2 says don't trade into them. Rule number 2 says give yourself room to your targets. Rule number 2 reminds you that a clear path coupled with momentum is a recipe for success. So when we talk about rule number 2, we're talking about it on the large chart. We're using areas on the large chart to define where the market may stop, where it may bounce, where fights may happen. And these lines on the large chart can cause trouble. And your trigger lines, the same ones that created momentum, are going to let you know if they're likely to stop the market, if they have the potential to break the market, or if they have broken. And you're going to do that, where's my PowerPoint, with a pretty simple comparison. Termination conditions are Fibonacci-based indicators that may reverse the market, and it's based on a comparison of the areas, support, resistance, one-to-ones, divergence highs, divergence lows, and it's versus the T3 trigger strength and location, the same ones that give you the advantage of momentum. And the recipe's pretty easy, guys, and we're going to start down here. So price is reflected in these dynamic Renko bars. That's all it is. Price fluctuates up and down all day long. These are your price bars. Dynamic Renko smooths it out. It's real easy to read. And what's cool is when price reaches an area, and this is the key to defining a termination condition. If price reaches an area, what happens is it's a catalyst for the decision-making process. The sellers were in control, and when the sellers reached Fibonacci support, well, there may have been a whole gang of buyers waiting there. There may have been a whole bunch of sellers ready to jump ship. And the cool thing is you guys know about this blue line hours in advance sometimes. So if price reaches Fibonacci support, check your trigger lines. And if they're not below that area of support, guys, don't take any more short trades. This is an area that may reverse the market. It may create a bounce. This is an area that might ruin your good time. So if price reaches and the triggers remain above, no more short trades. If price reaches support and no triggers are below, right? Everything remains above, no short trades. That's it. It really is that simple. When both the small and the large triggers get to the other side of support, well, support begins to behave as resistance. This is when we say that an area is broken. When both the small and the large get below the area if it's support or above the area if it's resistance, the area is now broken. The path is now clear all the way until you reach the next area. And guys, that's a very key concept. This area is broken, but once we reach this area, well, now we're back into a termination condition. The idea for us is that when we have this much momentum and the path is clear, we're going to sell a pullback to Fibonacci resistance, and we're going to ride that wave of momentum all the way down to the next key area. So no triggers, no trade. Both triggers, let's look for an entry if we have strength. And then your first medium probability trade is going to be when the small triggers smash through an area. And I can't express this enough. When they smash, when they're 2 to 3 points beyond the area, this area has the potential to break as long as there's odds favorable momentum, as long as there's separation between the small and large, and the bigger the gap, the more likely it is to break. So 50% of your triggers break through, but 50% do not. We call this a 50-50 trade. It's a medium probability trade where most of your indicators agree, but a small issue exists. Your small issue will be that there is no clear path, that rule number 2 is not completely in play. And you will have to manage it assertively. You will have to take quick profits, get to break even. And I'm going to give you a plan for that one as well. But let's remind ourselves that 90% of the day is just reading indicators. So price reaches resistance. The triggers are below. No long trades. Thank goodness. Look at the bounce. It pulls all the way back to Fibonacci support. All the triggers are above, no short trades. Thank goodness. Look at the bounce. Rule number 2, guys, is going to keep you out of an awful lot of trouble. Price pulls back to resistance. The triggers are below. That's a termination condition. It also pulls to a divergence high. The triggers remain below. That's a termination condition. It also pulls back to a second form of resistance and the triggers remain below. Look at how weak the triggers are coming into it. And then once again, guys, this is 2021. This is 20 minutes ago. Everything that we do is patterns. Patterns repeat themselves over and over again. So we can start taking advantage of these patterns. When price reaches a divergence high and everything remains below, we call this a pivot stop out, guys. And pivot stop outs are powerful. They're even more powerful when the termination at resistance is true. So if this termination reverses the market, we're going to call it a strong top. If a no triggers through termination reverses the market, it's a strong top. And a strong top is the precursor to the highest probability trend trade that you can take. If I have a strong top, if a termination reverses the market, and then it provides me odds favorable momentum, and it gives me a clear path, I'm going to look to sell resistance on a smaller, faster chart because that's the trade that typically wins 70 to 80% of the time. And then one more patience picture, guys. Odds favorable momentum. The market is screaming to the downside. It smashes through support, but notice that there aren't any pullbacks, and we missed an entire short move. That wasn't our money. There just wasn't an opportunity. It goes head first into these one-to-ones. Each and every one of you in this room has the power to just simply say, where are my trigger lines? And if they remain above, there's no reason to hope, to wish, to want, to pray that that support breaks. Just sit on your hands and wait for the reaction. Let the people in charge fight it out. The buyers push hard. If you went short, you just lost. And they went into Fibonacci resistance and the triggers remained below. So if you went long, you just lost. And then support never broke. The momentum wasn't there. So if you went short again, you lost. And long, you lost. And short, you lost. And long, you lost. And man, this is where fortunes are lost. 90% of your day is waiting for the advantages. 90% of your day is sitting on your hands and saying to yourself, my investment is worth momentum. My investment is worth a clear path. Eventually, the buyers win. All the trigger lines get above resistance, and there's nothing but green skies above. The smalls are outside of the large. The momentum looks outstanding. The path is clear. And then you guys just pinpoint this entry on a smaller, faster chart. You buy Fibonacci support, and you ride that wave all the way up to resistance. Guys, this from 81.10 to 81.49 is $390 worth of profit per contract. That's a wonderful trade unless you give away 1,000 trying to predict what the market's going to do. So 90% of your day is teaching you to be patient when there's nothing to do. 10% of your day is chock full of kickassery and taking you on that best of the best. So I want you guys to really embrace the idea that there's a recipe for success as a brand new user. And the more you deviate from the recipe, the less likely you are to win. Is everybody cool with using areas to define trouble? On the large chart, if you reach a line and the triggers don't break it, just relax for a second. Feel good about the idea that you don't have to guess. Sometimes the market doesn't make it to a line, guys. Sometimes it turns from the middle of nowhere, whether it's low or high. There's one more termination condition that we're going to talk about. And this is 3 divergences in the same price range. And divergence is nothing more than a loss of momentum. That's all it is. If the market comes down and pivots up, right, makes that little V look, right about the 3rd bar, a calculation runs. And if momentum doesn't follow price, you're going to see a negative number and a cyan line. The negative number is just a number. It has nothing to do with anything. It's a byproduct of the calculations. But when you see any negative number and a cyan line, you know that the momentum was lost, that the buyers stole the momentum from the sellers. If you see this 3 times in the same location, it might terminate the trend. It may terminate the trend. It could terminate the trend. It's not guaranteed to terminate the trend, but it is a termination condition and you no longer have a clear path. The same is true at a high. So you're going to use these 3 divergences at a low, 3 divergences at a high, and it's going to help you identify when that large, slow moving chart is trying to change, but it doesn't have enough bars to show you that change. So you're going to be able to use 3 divergences to say no more short trades. You're going to be able to use 3 divergences to say no more long trades, guys. And that is rule number 2, making sure that you're not trading into an area that may stop the market. On the large chart, lines are problems. On the small chart, we'll only give credit to 3 divergences in the same price range as a rule number 2, not true term ending situation. Is everybody with me so far? Grant, you doing all right? Miss Jen, you feeling good? I know I've got a couple new people. VM, how we doing? I know it's day 1 or 2 and you've only seen videos. I want to encourage you guys, if you have a question about anything that I'm talking about, don't be afraid to raise your hand. Hey, Mark, can we do it one more time? Can we talk about price reaching an area one more time just to make sure? And then sometimes, you know, I did this earlier. I'm going to do it again. Where's my large chart? That's not it. Let me pull up my large chart here. Sometimes it's fun just to go back and look. Price reaches support, there's just no reason to go short. Price reaches support, triggers above, there's no reason to go short, even with momentum, even with a clear path. So if you spend a little time going back and watching the market bounce off of these fibs, it creates an enormous amount of trust, and you will be absolutely floored at how often these areas can stop a market. And you'll be even more floored when you realize that a termination condition at a low is what set off that giant buying spree. And then it exceeds the areas, pulls back to support, and continues up. Exceeds the areas, pulls back to support, continues up. We see the fight. Rule number 2 keeps us out. And sure enough, guys, we're using our rules to keep us out of the little intermingling fights. And we're really focused on having the absolute best of the best, making sure that we have momentum, making sure that there's nothing in the way. And now that we have it, let's define our entry area, guys. Entries happen on the small chart. We do not trade tails on the large chart. By the time the tail prints, the market is gone. It is gone. So rule number 3 says that we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. We're going to use a limit order. Guys, that means that you're literally going to be able to wait for the market to come to you rather than chasing price. We're going to use it at areas. Areas were problematic on the large chart, or areas provided us a good top or bottom on the large chart. On the small chart, they give you a bounce point. Areas on the small chart are like a brick wall, and price is like a tennis ball. It gives price something to bounce off of, a place for continuation. But the key and the highest success rate comes when those areas are inside of triggers. So in one breath, I'm going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. And let me show you how the small chart works. When the large chart, the large crowd, the people in charge say that they want it to go up, the market typically goes up. When the large crowd says, here's all the momentum you could ever hope for, it typically continues in the direction that they've chosen to go. And when the large crowd has absolutely nothing to bang their head on, again, that momentum tends to push the market up. But there's always the small crowd. There's a group of ne'er-do-wellers, these hoodlums smoking cigarettes on the corner, that love to fight the system. They love to fight the large crowd, and they've got just enough money to give a shove. Guys, Nexgen users, we rely on this shove. We rely on this fight to get us back to areas inside of favorable large triggers. So when we talk about rule number 3, we are going to buy or sell a pullback, this little retracement in price counter to the underlying trend, and we're going to wait for it right at areas inside of triggers. So we're going to dissect it. And I want you to see this. The large chart, the most current bar, says up. The background is green. The large chart says that we have momentum. Smalls outside of the large, space between the two, the scissors are open. And the large says that there's absolutely nothing in the way. Resistance is in the distance. It rhymes, so you know that it's true. And then we've cleared the areas below us, guys. So if you could give me a why, please, if you're new, if you're working on this, the large chart in one bar is defining direction, momentum, and areas. My first 2 rules are met, and I'm going to turn my attention to a smaller, faster chart. Because when the large chart says giddy up, I'm going to buy low on a smaller, faster chart. I sure will. And then when the large chart says down, I'm going to sell high at resistance on a smaller, faster chart. Roku, do you mind if I go through the entry rules first? And then once I'm done, we'll go back and we'll snap a couple different pictures and talk about all of it. Love to. So we're going to talk about the dissection of the bar, guys. The large bar, large chart, one bar, from bottom to top, from tip to tail. Guys, this is slow moving, but it's defining direction, momentum, it's defining areas. On the smaller, faster chart, you're going to see 10 to 30 bars if you circle one bar here. You're going to see the bottom of the most current bar is where we're hoping that pullback begins. And that tip or that tail in a perfect world is resistance up inside of triggers. So our objective is to sell high. We're going to use the refinement process to make that happen. And because we sell high, we have even more room to get to our targets. So the idea is when the large chart, and let's go through one. When the large chart says strength, when the large chart defines direction, when the large chart has a clear path, I'm going to wait for a reversal bar on a smaller, faster chart. I'm going to wait for that small crowd to start to fight. A reversal bar is not a pullback. A reversal bar is the signaling that the pullback's about to begin. Once I get that reversal bar, I've got to look for my trigger lines, large and synthetic. These synthetic triggers, the step triggers, are just the large triggers from the large chart. But here's the coolest thing in the world about having advantages, is when the large and the synthetic are one on top of the other, when they're really tight, when they are focused like two snakes riding piggyback, whoops, that was huge. There's just not a lot of room for areas to be inside of them. And my rules say that my areas have to be inside of the trigger lines. And what happens is the triggers are a correction point. The triggers are where the market is likely to pull back to. When I give them something solid to bounce off of, I create a window where the market is most likely to continue. So I look for my triggers, and then I look for the areas within. Notice how that box got a lot smaller? From the lowest point of resistance to the highest point of resistance defines the point where the market is most likely to continue. This is my window of opportunity, the best of the best. We are going to pinpoint where this downtrend, where this clear path, where this momentum is most likely to continue and resume the trend. So when I define my areas inside of triggers for a short trade, I'm going to activate a limit order right at the bottom, at the closest point to price. Because of this momentum, I'm not sure if it's going to even make it up that high. So my limit order is activated, and if the market comes back to it, I'm in a short trade. I've entered the market with the advantage of momentum. I've entered the market with absolutely nothing in the way on the large chart, and I've entered the market right at the point where the market is most likely to continue. And guys, this is your focus for 20 days. Waiting for the reversal bar, identifying your triggers, the big red box, and then identifying the areas within. From the highest point of support to the lowest point of support, the cyan box represents where the market is most likely to continue. And guys, this is your entry for the highest probability trend trade. You're going to activate a limit order at the top, and you're literally going to buy the market while it's going down because you are that stinking good. This area beyond the correction point, beyond the triggers, beyond the areas, guys, that's not a part of the window of opportunity. This is too far out of the loop. This doesn't count as where the market's most likely to continue. It needs to be buried inside of those triggers. For a short trade, it's no different. You wait for the reversal bar up, and when you get the reversal bar, I want you to identify your triggers. And then inside of the triggers, there has to be a line. There has to be something for that market to bounce off of. In this case, there's only one line, just a mid-band. That cyan box is pretty small. My limit order goes just below that area of resistance inside of favorable large triggers. And I'm going to activate a limit order, right? And it's either going to get it or it's not. If it gets it, this is my trade with all the advantages. If it doesn't get there and goes down, it's simply not my money. These areas outside are not in the window. So when you put the two together, large chart says up. Large chart hasn't reached the area yet, but it sure is close, right? That's too close to make any money, says the new user. But the experienced user, the person that's gotten in the habit of circling these tails on the large chart, knows that we're going to buy a pullback to areas inside of favorable large triggers. The circle on the tail, this is a great way to study, should line up with support inside of favorable large triggers. If it does, you magically go from $50 potential profit to $250 potential profit. So this becomes your study tool, guys. Circle tails on the large chart when there's momentum. See if they line up with support inside of favorable large triggers on the small chart. What it's going to do is it's going to burn this image into your brain. It's going to burn this image of the perfect trade into your brain, and you can take that picture and drop it into your spreadsheet and study it. And the more you see it with absolutely nothing moving, the easier it is to catch it when it's live. I promise you this. The market almost seems to slow down the more times you see the look. And my favorite part is when I understand where the market is most likely to continue, I understand where the market shouldn't go. I've defined with pretty much a lot of precision where the market is most likely to continue, which means that if it goes 4 or 5 ticks beyond my areas inside of favorable large triggers, I don't want to be in the trade anymore. I'm going to get out. I'm willing to take a loss. Because anything that wins 70 to 80% of the time, guys, it's obligated to lose 20 to 30% of the time. It's a normal part of a positive equity curve, and what you'll find is that you will take losers. You should get comfortable taking losers. You should accept that it's just a cost of doing business. But because of the momentum, because of the clear path, because of defining exactly where the market is most likely to continue, you can reduce your losers dramatically. And even better, once it starts to do what it's supposed to do, reversal bar prints in the other direction, guys, you can reduce risk even further, right? Just below that reversal bar, above that reversal bar. And then here's one of those hard things about trading is you've got to trust the idea that it's already said it should go up. It already had all the rules met. And if it comes back, take your 2 to 3 tick hickey. Take a small loss. Wait for the next best trade, because if you're winning $200 to $300 a trade and you're only losing $30 to $40 a trade, it's very difficult to not make money as a trader. So, guys, that's our lesson. The lesson is defining entries more than anything. Understanding that when everything says down, when there is momentum, when the path is clear, you're going to be able to recognize pullbacks directly to resistance inside of triggers and hopefully capitalize on this look. And Jen, it really does. And I told you yesterday, you're going to be amazed 30 days from now how easy it can be. So guys, once again, strong triggers, sell a pullback. What's it look like if I circle that tail? The triggers aren't one on top of the other, but it still bounced right off an area inside, didn't it? So what you're doing is you're developing trust. You're developing recognition. You're saying to yourself, with all the momentum, life is good. Things get easy. When the momentum is screaming to the north side, my only job is, drum roll please, to buy support inside of favorable large triggers. So guys, give me a why if you're with me on this one. All I want you to do for 20 days, 30 days is focus on entries. Just focus on picking where the market is most likely to continue. And then from there, you'll begin to learn to manage it. But you can't put the cart before the horse, guys. You have to understand momentum. You have to understand when the areas have the potential to break. You have to understand that we're not jumping in up here. We're letting it pull back to the area support. And guys, let me zoom in on this one a little bit. If you got in at the mid band, once you get a reversal bar, you've got a fraction of risk. You've got about 2 or 3 ticks of risk. So kind of a good look there. And then Roku, are you using Snagit or are you using Capture software? So we're going to go over the second half, guys. Let's capture some pictures using Capture. All right, so here's my Capture software. 2-chart process. So I'm going to click Capture. If I hover over just one chart, it's only going to give me one chart's worth of information. And I want to do this too, guys. If you don't see a black highlighted price, you're not at the most current price. You're going to want to use this arrow, press it, and it'll take you to the most current price. That's how I know I'm where I need to be. If there is no arrow, but you still don't see it, you're trading off screen. So you may come into the market in the morning, maybe you adjusted it yesterday, and you're like, I don't have any indicators. I don't see price. Man, nothing is moving. My software is broken. Oh no. So I want you to click F and it's going to bring you back current. And if you don't have an F, but you do have an arrow, I want you to click the arrow and it's going to bring you back current. You can see how the two charts are lined up. So when we're taking pictures, guys, this is what's so important, is I want you to mash down the capture button. And when you mash down the capture button, I want you to go to the top of your large chart. And one more thing, guys, I don't need to see all of this for your long trade over here. It's all right. Give me the easiest picture to read, please. If we're going long over here, all I need to see is this area, right? I can define everything right here. So I want you to take your capture button and I want you to click it and I want you to go from the top left and I want you to drag down to the bottom right. And then I don't need to see your chart traders, guys. I don't need to see your money, because if I do, I'm going to ask you why you just won $300 but you're down $1,000 and you didn't share those pictures. So once I release that button, it gives me this option. This option tells me I can take a video or I can take a picture. If you're really working on following your rules, if you're really working and you're at that point where you understand the looks, but you find yourself fudging the rules a little bit, click that video button and talk yourself through what you're doing. You'll be amazed at what you say to yourself mid-trade. Talk about momentum, a clear path at an entry area, and you'll know instantly whether or not you're breaking rules or following rules. But we're going to capture an image. And once I capture an image, I get an image preview. And notice that it shows me the timestamps. Notice that it shows me the prices. So what I can do is I can line things up. So if this tail was my entry, I can line it up and I can say this is what I'm looking for. You don't get the download? Are you talking for the NASDAQ? Because the NASDAQ chart, this is a NASDAQ chart, so that's actually a 13.2. You need a crude oil? All right, let me do this for you real quick, David. Small digression, sorry guys. Always ask me if you need anything. Always ask me, because I'll give it to you, because I am not stingy. There's my workspace, David. You can have that. And then if you just want to open up that workspace, it'll work for you. If you only want the template for the 5-1, let me put it in a folder for you. No, you're okay. There's the 5-1 template as well. And I apologize for the digression. I told you guys, shiny things distract me. So I've got my image preview. And notice how I'm seeing my large chart and I'm seeing my small chart. So this is what I need you guys to do. I need you to draw boxes around your entries. This is where I got in. And I need you to draw maybe a box around your exit and say, this is where I got out. And I want you to, on your large chart, I want you to draw arrows, right? And we're going to talk about different things. And the more information you give me, the better it is. So you're going to click and drag. All of these tools are click and drag. Left click, drag. Small box for text, big box for text. Once I have the box, I'm going to put price cleared, resistance, both triggers through. Resistance is now support. And what does that do for me? What this does, let's just do this. Let's not even say price cleared, right? Let's just keep it as simple as possible. Both triggers through. There's my arrow. Resistance is now support. So I'm reaffirming what it takes to break an area. And then over here I'm putting not strong triggers. Both are still up. Strong trend. I'm writing what's going on in my head. Why am I doing what I'm doing? And then I'm pointing to the top of the bar, and I'm using that call out button again, and I'm going price has not reached the area. My path is clear. So I defined the areas that I broke, and I defined where I'm going, right? My path is clear from the front of the bar. And then over here, I'm going to write my entry rules. And my entry rules say, from an area inside of favorable large triggers. However, since it was a strong trend, no terms, I use the midband even though it was below. So what I'm doing here is I'm saying, hey Mark, this is where I got in and I know that it doesn't follow the rules, and I want you to know that I know that it doesn't follow the rules. But I use the midband because of the strong trend, the clear path, and I exited, here we go, and I exited at Fibonacci resistance because it seems smart, right? Or I exited too early because I panicked. And tell me exactly what's going on. So Roku, click and drag gives you everything that you need on a chart, even a highlighter. There's your arrows. But guys, this is what I want from you guys. Every time you take a trade, I want to know what's going on in your head, because the goal is that we work together to make you a chart reader. So once you have it, Roku, click copy. And once you click copy, it's going to put it onto your clipboard. You're going to come over to the room, and if it's the pop out, you're going to hit Control V, and that's going to paste it in the room. And then the second half, guys, is click upload. And once you click upload, it's going to give you the screencast link. So copy it again, and that's the link that you're going to put into your spreadsheet. So you're going to drop it in the room if you want, or you can copy paste in the room. But once it's on my clipboard, I'm going to come over here and I'm going to go to my trade tracking and I'm going to drop it in, and it's going to give me that screencast link. Whoops. I'm going to drop it right into the trade link. There's my picture link. But it says app screencast. I have no idea what it is. So the next thing to do is I'm going to click the insert tab and I'm going to click the link button, and then we're going to create a hyperlink. And I'm going to paste the address in there like I'm going to Google or eBay or whatever, setting up a tea time. And under text to display, I'm going to put long trade, or I'm going to put long trade loser, or long trade winner, or made a mistake, or whatever that describes the picture. And I'm going to click OK. How did I feel going into that trade? I was a little nervous because my area wasn't inside of favorable large triggers, but I was coming from a strong bottom. I had a termination that reversed the market. My 13-2 triggers were kind of anything can happen, or maybe they were odds favorable. Hopefully they're never against. My 5-1 chart was strong. It looked good. And man, I won all the way through. And in class, when I presented it, Mark said, be sure to manage aggressive if you don't have momentum or an entry area, relying on the strong trend. And then what happens is I'm going to come back tomorrow and I'm going to look at this and I'm going to take that feedback and I'm going to set myself up for the day. So guys, that is your path to success. That's the one that's going to get you there. So strong triggers, right? 50-50. The large triggers haven't broken, but the small triggers have smashed through the area. I had a mid-band inside of a trigger here, but I also had resistance inside of a trigger here. That's a pretty big window of opportunity. If you jumped in at the mid-band, you may have gotten run over on the way to the higher point of resistance. If you waited for the higher point of resistance, well, you may have made a little bit of money in that trade. So if you took it, let's talk about it. If you took the first one, divergence on a 50-50 says be careful, and there it goes pushing higher. So everything's going to revolve around the chart read, guys. Everything's going to get you into that chart read, and then your chart reads become easier. Your annotations become easier if you write the rules on the chart. So I'm going to give you a KISS trading plan. This is my gift every day. The KISS trading plan is designed to optimize your chances of success with a high probability trend trade or one of those 50-50 trades, those potential to break trades. Guys, this is a stepping stone in your learning journey. This isn't the end of the road. This isn't the last step in the process. This is literally teaching you to become a chart reader, guys. And then through simulation, study, class feedback, and continuous practice, you're going to be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. That's a big AI-generated fancy way of saying when you're a chart reader, you're going to figure out your plan. You're going to figure out what works for you. You're going to decide whether or not you like blondes or brunettes, and then you're going to stick to that and commit to that and make sure that you're good with it. So your simple plan for consistency as the brand new user is never fight the large chart. And I shared this book yesterday. I'm going to do it again today just because it cracks me up. Never fight the large chart. Guys, how to commit financial suicide in one easy step. It's actually one easy step, 2 chapters. Trade against strong triggers. Rarely works out for you. Trade indetermination conditions. And guys, this was put together as a joke by John Novak. He was probably playing with picture editing software or something. But these are the 2 most common mistakes that new users make. Trading into areas likely to stop the market and just fighting the momentum. So this KISS plan is designed to give you the best of the best. This KISS plan is designed to keep you focused on not making those common mistakes. So there's a checklist, literally. Is it coming from a termination that reverses the market? Do you have strong triggers? No terminations? Was there an area for entry inside of favorable large triggers? If it was, guys, if you mark yes to each and every one of these, take the trade. Your rules are met. Your advantages are there. I've never had anybody follow this truthfully and do worse than 70% ever. But this is just the beginning, right? This is just getting you focused on getting into the market at the correct spot. Once you're in the market, you've got to do something with it, guys. We keep entries very mechanical for the new user because all you're doing is learning to read charts. We keep entries really focused on the best of the best, on giving you the highest chance of success, because the more you're winning as a new user, the more you're focused on all of these advantages, the more likely you are to be in this game longer than the person that has to do it their way, that has to fight. So the same way entries are mechanical, guys, I want your management for the high probability trend trade. If you're learning something new, keep it as mechanical as the entry, right? Try to eliminate that emotion, fear, adrenaline, all that good stuff. And make sure that your management plan is based on the advantages, that it's based on the entry where the market is most likely to continue. Because once you understand that, you know where the market shouldn't go. That's where your initial stop goes, guys. And there's nothing for you to do at this point. It's either going to get hit or it's not. You're either going to win or you're going to lose. It's either going to go up or it's going to go down. You have zero control over that. There's nothing you can do to affect that market. So it's either going to hit your stop, it's a cost of doing business, or the market gods are going to bless you. And with all those advantages, you're going to get a reversal bar in the direction of the trade. And once you do, you can reduce your risk a couple ticks above it because it's telling you, here we go. I'm going with direction. I'm going with momentum. I'm going with that clear path. You have 2 targets set up, guys, $100 and $200. The odds of you hitting $100 are pretty good with all those advantages. And once you hit it, I'm not going to lie, $100 feels great. $100 dries up your sweaty palms. It slows your pulse. It makes you feel good. You holler to the other room, "Hey, Susie, I just won." And you're going to go break even. You're going to take all of the risk off of that trade. You are going to have absolutely nothing at stake because the idea is that you're learning to trust that the only reason you're short in the first place is because the large chart is screaming to the downside. So you're either going to get stopped out, break even, or it's going to go to your second target, which is just $200 in the distance, guys. And if it hits it, you're exiting, you're out, you're done, no more. It doesn't matter what happens next. But you're up $300. You nailed your entry, and now you're learning to trust those entries. You nailed the second target, you're learning to trust the momentum on the large chart. And all you're doing right now is creating confidence in a plan that has been proven to win more than it loses. But you've got to get to the point to where you can do this effortlessly, where you can see these advantages in the moment and capitalize on them. And the easiest way to do that is to take a bajillion pictures and go back and study them and get feedback and make sure that you're reading the charts. And then the second trade is that 50-50 trade. That one area not broken, potential to break. And it reminds you that if you don't have a clear path, don't give up momentum on any of your charts. And then it reminds you again that divergence is a loss of momentum. Don't give up the freaking momentum. And if it's coming from a termination that reverses the market, get in at the area, guys. Take that trade and feel good about it. But it's not a high probability trend trade. It's not a trade that typically wins 70 to 80% of the time. It's a medium probability trend trade, which means that if you start losing momentum, get the hell out of the trade. It's a different management plan than the high probability trend trade. So you're going to take quick profits, either at the trouble spot or $100, whichever comes first. And you're going to take quick profits on the second, guys. And this KISS plan is designed 100% to keep you focused on the best of the best, to keep you streamlined and aggressively seeking success. If you are one of my traders that's struggling a little bit, maybe you were doing great, you were following rules, and now you find yourself trading your reads rather than your rules, the KISS plan is a great something to come back to. I'm also going to give you guys a checklist. And the checklist, this is what I want to see written on charts, guys. I want to see where it's coming from. I want to hear about your momentum, your termination conditions, and I want you to use the language, areas inside of favorable large triggers, because that gives you the advantage. This is the new users. This is how you learn to police yourself. This is how you become a chart trader, a reader. And again, I've never had anyone answer yes to all of these and do worse than 70%. So use these tools. They're simple. The rules aren't difficult, right? You have the greatest hammer ever provided, anybody in the world, and now you just have to learn how to swing it so that you can get the most out of it. Look at that support held, right to resistance that held, right to support that held, right to resistance that's holding. Guys, 90% of your day is sitting on your hands and doing nothing. When a market, through rule number 2, is showing you that it's caught in a range, you can either hope it goes up, wish that it goes down, or you can sit on your hands and let it break the range. You're witnessing the fight between the people in charge. If there's an opportunity in the middle, go rock star on it, right? If there happens to be an opportunity to get to the next area, well, then take a shot. But don't break your rules in a range, guys. If the 50-50 doesn't work twice, don't try the next 50-50. Insist that it breaks. If you can't get triggers above resistance, don't trade into resistance. Wait for it to break. So right now we have a termination, right? We have a market that's pushing up. I have flat triggers, not strong triggers. I don't have triggers above resistance. Everybody in this room right now is going, but Mark, it's green and look, and this is the greatest look ever. And I've got to take a pullback, even though it's directly into a termination. Guys, it's cool. Be patient. There's going to be more, especially if you're a NASDAQ trader. So that's my first hour. Thank you for putting up with me and listening to me go on and on and on. Weak triggers, there's a reversal. Area doesn't break, there's a pushback to support. I wonder if weak triggers into resistance is going to push it down. Man, how many times is that picture going to surface today? Weak triggers, there's the push. Rob, if you need to know if you already posted a pic, you have to scroll up and see if you posted a pic. That's really the only way to do it. The only way that I know to do it. There may be a different way, but that's the only way I know, is you have to actually scroll up and take a look. So guys, I'm going to leave you with this market. Watch it go up, watch it go down, see if weaker triggers and divergences at terminations push it lower, or if all the triggers above support push it higher. And I'm going to take 5 minutes. I'm going to run a lap, stretch my legs, breathe through my eyelids, do all the things that make me happy. And when I come back, we're going to start looking at all of your pictures, guys. We're going to look at what you did. We're going to look at why you did it. We're not going to talk about whether you are a great human or a bad human because of your trades. We're simply going to look for advantages and see if there's anything that you could have done better. So I'll be back in about 5. When I come back, we're going to start reading charts. Back in a second, guys. I love you, period. I had to pay electricity this morning. Period. It was due today. Period. I think $138. Period. All right, guys, coming back at you for the second half here. Um, I'm such a huge fan of the phrase that key areas are where decisions are made, guys. And I want you to see like 2 bars, 3 bars here. Look at the fight in between the fibs. You see it on the small chart more than you see it on the large chart. Does everyone see this? You guys knew exactly where the problems were. You knew how to get to the problem. And then you knew to just relax for a second when you were there. Your small chart told you, hey, it's not good, it's not great, we're not there yet, it isn't wonderful. But notice that your large chart triggers never stopped going up. Your large chart never said that the market wasn't going up. But those weakened triggers allowed a fight, right? It allowed the fight, and now we've got weak triggers into resistance. And sure enough, there's a bigger push coming down, but we're pushing right into support. So taking a minute and just reading indicators, right? Waiting for everything to be right. It's going to keep you out of trouble. It's going to get you focused on the best of the best. And always talking about what the chart read is. So what is the chart read? The market is down. Let's make it bigger. The small triggers are down. Now the large triggers are down. Down at the bottom here, Rob, there's a little scroll bar, and you can just all the way back. That's the easiest way to do it. If you have 2 monitors too, sometimes if you're circling tails and going back, making your 5-1 bigger and tightening it just a little bit like that so that you can see where the circles are, scroll back, and then when you get to the circle, you can blow it up to take the picture. Weak triggers at resistance, guys, and it went straight to support, and to the tick, it created a bounce. Isn't that amazing? Rule number 2. Such a fan. Weak triggers at resistance. Here we go again. Another push. Strong triggers, tail up. Strong triggers, even in determination conditions, tail up. Pretty awesome, right? It broke out of the range, and it made it right to the next key area. I love what I do, guys. I love reading charts. I love looking at indicators. I love having these advantages. They really are outstanding. All right, VM Tech, we're going to start with you today. And I'm just going to load up all your charts, and then we'll go through them one by one so that I can get to the bottom of the chat box and not have to scroll back and forth. So let me load all these in real quick. And I'm going to come down to the bottom. And just a reminder, guys, that I do go through all of your pictures in order. I try not to jump back and forth. So if it feels like I've skipped you, make sure that I just haven't gotten to you, but you're always welcome to post in the room and go, hey, Mark, I put a picture in at 9:45. I want to make sure you didn't miss me. Hold me accountable, guys. All right, VM Tech. So here's what we're going to do is we're going to go through and we're going to talk advantages every time. Everything says down, right? Everything says down. The momentum is good. The area has the potential to break. And you said perfect pullback entry, mid-band touching, all trades. It was closed 6:30. Entered very late on the pullback. Small triggers, large triggers in favor of the downtrend. I love all the information. And then you put your target a couple of ticks above the yellow 1-to-1s. Beautiful. So VM, the one thing that I want to talk about, Shift F3, Chris. Have 4 workspaces open, and then every time you hit Shift F3, whoops, it'll toggle between them instantly. Boom, 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 boom. So VM Tech, the one thing that you said on here, and I want to make sure that we're talking the same language, and let me know if I'm mistaken. I noticed that you said that you entered very late on the pullback, and you talked about the perfect pullback to the midband, right? Are you talking about this midband? Awesome. So this is why posting is so important. Your large chart told you, without a doubt. Your large chart on this bar said that the market was likely to go down. The large chart said that the momentum was there, right? And you read that beautifully, absolutely beautifully. Let me show you something cool. Is the bottom of the bar on the large chart, when all that information is coming in, is this reversal bar on the small chart. So you're going to actually take a little refinement and you're going to sell a pullback to an area inside of triggers. So your rule 3 trade comes right here at about 42.66. And you were close, but it's about 2 points higher than your entry. And your stop goes up here outside of triggers. So what happens is, by using that smaller chart as a refinement tool, it allows you to actually have less risk on the trade. It allows you to actually have more room to get down to that profit. So rather than trying to trade a tail and all that good stuff here, rule number 3 is going to get you that pullback on the smaller, faster chart. It's a beautiful large chart read. It's still a great entry on the small chart, but correct me if I'm wrong. The market was going up, and when it started going down right here, you said something clever like, oh my goodness, it's going without me. I better hurry up and jump in. Because you were waiting for that mid-band up here, weren't you? I've done this once or twice. So what's cool is when you have your rules very concrete about where to enter, you're not worried about these little fluctuations on a small chart. You're literally in right where it's most likely to continue. And then you had to ride out a little bit. And this is a NASDAQ thing. When your small triggers are that strong, don't fight them. But right now, since you're brand new, I want you identifying the entry area. And the NASDAQ's a little more difficult to trade because it's got a little nuance. And then with this perfect look and this pullback and identifying the area, one of the things about the NASDAQ is when it's this strong up, you really have to wait for a close on the correct side. It's the exact same entry price, but it doesn't have you fighting that immediate momentum of the small triggers. Beautiful trade. Great hold, outstanding exit. Welcome to Nexgen. We're going to do this every day. All right, same trade. And now here you're taking advantage of momentum. You do have a termination that reverses the market, that gives the best of the best momentum. And when it clears the area, you're saying, well, I'm just going to ride that momentum up to trouble. So you get in past the pink 1-to-1s, beautiful. And just for the record, these are small swing 1-to-1s. Divergence lines are more of the lines. These dots are small 1-to-1s. So you did perfect by letting price get to the other side, the momentum for the win, and you're out. You knew exactly where it was likely to go. What a beautiful trade, VM. And you gathered all this just from videos, huh? And then termination, best of the best momentum. And here your large triggers were down here. Your synthetic triggers were up here. When you have this look, this is what we call split triggers. And we know that it has to come from areas inside of triggers. So getting it up here at the mid-band, and again, just a couple ticks higher, you're close. There's a lot of risk on this trade. There's a lot of risk because your synthetics are all the way up here. And this is another one of those instances on the NASDAQ, and I hope you guys all see it. Do you see how the small triggers are up against you? Waiting for a close on the correct side, especially when you have this split trigger look, is going to give you a little better entry. It's going to establish your risk right from the get-go. And then once again, your exit could have been all the way down here at that next trouble spot. But really great large chart recognition. Entries are easy to refine. And then another one of those, just gauging momentum all the way down to support. Really well done. Strength, clear path. You get in. I would have liked to have seen VM. And I know this is a lot of feedback, and I hope you're taking it all in. When you're in a momentum trade, right, and everything is screaming down, if you just jump in, and that's okay, I'm not knocking this at all. There's a lot of people with a lot of success on it. It's okay to get out here. You've got a giant blue line that your triggers aren't breaking through just yet. It's okay to get out. Take your money and just wait for the next best trade, right? Get out here, let it push. Hell, maybe re-enter right here and take that next wave down. You can literally double dip. But knowing where these areas are creates such a huge advantage. And I showed this picture earlier, and it was kind of a little brag, but it was pretty cool. You're literally going to understand where the market is likely to go. And this was so much fun because if you look at my exit on this short trade, it's literally the low tick of the market. The low tick of the market was my exit. I knew that there was Fibonacci support. I knew that the trigger lines were above it. And I said to myself, I'm just not even going to bother risking it. I'm just going to get paid at the line. And the goal is always to get paid. So great momentum, great recognition, clear path. I think your entry is just fine. It gave you room to the target. Be okay getting it off at the target. Look how it created a bounce. And it could have bounced all the way up and taken you out of this trade. Does that make sense? Beautiful trading, though. Absolutely beautiful trading. It will. But remember when I said momentum leads the way? Momentum typically carries you to the next area. And that's the biggest thing. And what's wonderful is you don't have to get every dollar of every move. If you make, I don't know, let's say you make $250 twice, and that's the best you can muster a day, which is rare. There's a lot more money out there than that. That's $125,000 a year on only a 2-lot. A 4-lot puts you in the $250,000 range. And that's what people forget, is it's not about home runs. It's about getting paid. Everything says up. The momentum is its strongest, right? No, actually this one, 3 to 500, then if your goal is only 3 to 500, then it makes even more sense to get out at 21, because from 7 to 21 is $120. It's 6 points. Do that on a 2-lot and you've almost reached your goal. Pretty insane. All right, I got to get you on this one though. And this is one of the reasons why I really like you to write your rules, not just what you see on the whole chart, but also what you see when you're taking the trade. So everything behind us, right? The strong upward move. There's your first entry. I love it. Momentum, giddy up, make some money. Let me line up your time stamps. Okay, so this is the middle of the night. So this is later. So you got in here. You get in down here at 2110, 2110. I'm trying to line you up a little bit. This one's a little more difficult. 46. So that's this entry right here, right at support, everything up. I like it. Momentum is good. Looks nice. You're in one contract and you're out one contract. You were confident it will top? Okay. Your indicators didn't tell you that, not even a little bit. And I'm trying to see, this was your second entry, and I don't have that on the small chart here. So you took one here, and you got out there, and then you entered again right at the top of the move with weak triggers. And I can't tell, I think that's this one right here. Do you see how you traded directly into resistance? The triggers hadn't broken. So you get in low, I love it, and it takes you up, and you get in high, and you get absolutely run over. And what terrifies me is that you sat through 1, 2 divergences, everything's set down, everything's pushing lower, and you risked so much of your money on this trade. You literally got in at 59, which means that you had to have at least 18 points of risk trading directly into termination conditions. Does that make sense? What happened? You had at least 18 points of risk. So one of the great things about what we do, VM, is that we know that if it doesn't go from the area inside of triggers, it's okay. Take a small loss and wait for the next best trade. And this is middle of the night. It's a little tough. I love the first trade. You had room to the target. The second trade you didn't, and it got you. And what a difficult hold. What a terrifying hold to me. And I see people do this on simulator, and it creates this false sense of security. And the second you go live, it's just going to keep running down. And you're going to keep moving your stop. And I've watched people do it, and it's such a difficult thing to do. And then here, downward trend, weak bottom, not a good trade, but grab small profit from the long. And I'm not afraid to tell you that you got lucky. Nothing about this market set up, and then once again, you left an exorbitant amount of risk on this trade. You were in at 93, and the market went all the way down to 83-ish, which means that you were over $200 in risk on a market that told you that it was going down, and you just hoped that it would go up. So this is where I always encourage people, practice like you're going to play. The goal is to make money, right? The goal is to always have a statistical advantage. And if both of these triggers are down and it's not coming from an area, there's zero advantage. It's okay to sit down and do nothing. I would have rather seen you go short from resistance and try to carry it down, right? At least this goes with the triggers, with everything overall. But it's awesome. Great first week. In VM Tech, let's do this every day. Let's do this every day until it becomes second nature for you. And these trades become easy. Keep taking pictures, keep annotating charts. And what you're going to find is that the reads become more clear. You're going to learn how to minimize your risk. And we're going to get exactly where we want to be. Bad top, all the way to the mid band. Everything reverses, clear path with strong triggers. Grant says, look at that momentum. I'm going to get in and I'm going to get out. And then Grant, just a heads up, on the NASDAQ, these pink 1-to-1s are as powerful as any other line. That's one of the NASDAQ nuances. Beautiful trade, Grant. You're like, that's a bad top. I'm not getting suckered into the short. I'm going to wait for them to continue and go up to the great spot. I love it. What a beautiful trade, man. Great trade. And then your next trade, 50-50 trade. And then Grant, this is where the KISS plans would have helped you out a lot. It's a bad top. It's not a good top. It's not coming from a decision point. And this is a 50-50 trade, but it's not only a 50-50 trade on one area from a bad top. It's a 50-50 trade on two areas from a bad top. And those two areas are an 18-point spread. So you're hoping that from a bad top in this huge area that momentum pushes you through, which is cool. Sometimes it will. But what happens, Grant, is when you have a bad top and you have multiple areas and you get one divergence, this is them telling you, Grant, don't take this trade. And then you take it anyway. And the second divergence is them going, seriously, Grant, just let's not lose money today, brother. I'm gonna rifle up off of this. Your window of opportunity was from 58 to 75. Two divergences on a 50-50 trade is such a deal breaker for me. It doesn't have to be for you, but a lot of times this is the man, I just want to catch a trade before class. The dog's barking. Because if it goes, I look brilliant, and if it doesn't go, egads. I think that the momentum was great, but you had a lot of things working against it that just could have kept you safe and out of that trade. Divergences on a 50-50 kill 50-50s so often. It's the most lost trade with new users is the 50-50 with divergence. Gary, triple top, but you ignored the triple bottom, which is interesting to me. You ignored the triple bottom, which I find interesting. You ignored 3 divergences right at support, which is okay. And you went against odds favorable momentum on the large chart. And you took the short. Right at synthetics up at areas inside of favorable large triggers with odds favorable momentum. And Gary, I know that you have rules for that one. But it doesn't make any sense to the new user. So, and I'm not beating you up, man, and I know exactly what you're doing. But I have to point out in the classroom, 3 divergences in the same location, support with all the triggers above it, support with all the triggers above it, 50-50 to the upside into a termination, right? It may hold, but you still have areas inside of support, and it's a momentum style trade, guys. This is Gary with beautiful execution on a momentum style trade. Look at how strong the small triggers are down at 917. And at 917, they begin to turn. And this is the key to what he's doing. 2 divergences suggest a slowdown. 2 divergences add a termination condition, add strength to the idea that that termination condition may hold. Super strong triggers is fast momentum to the downside. And it's a little premature over here, I think, because you are directly into a million termination conditions. But look at the little stab back. And your little stab back, the HVA wouldn't have been there yet. The HVA didn't form until below. So you're trading with the smalls below, but the large up into a termination. I think this is one of the ones that doesn't win as often as you'd like it to. It feels great on simulator, but when you go live, that's one of the ones. It's a little premature and into an awful lot of blue. And those don't work as smoothly as this one did more often than not, is what I've seen from my experience. And then Ron, I love it. Termination, strength down, let's get paid. Termination, strength down, let's get paid. And this is the same look. This is the same thing, right? But instead of trading from the trouble, trading beyond the trouble. And I think that little safeguard pays huge dividends. Gary, I'm not knocking your trade. You just got to watch that one. Everybody that's worked with my brother loves to go counter trend. And then here's the NASDAQ. Let me figure out which charts are which. That was live. Oh, my bad. It said sim. Your entry chart says sim. Your big money says sim. That's okay. Live sim. There you go. Which chart's leading the way for you? Is it the 34 or the 21? 34 is a 50-50, but 21's clear. So this one supports that one's likelihood to work. And then you refine it on the smaller, faster chart. And it looks like you wait for the HVA to hit and take it up. It's a nice trade, Gary. I love the trickle-down effect on the charts. Large chart says it might work. Next one down says, hell yeah, this should be a great trade. Entry chart says, let's refine our risk. Range chart says, let me give you a beautiful green line right where you're hoping everything works out. Gary, that is trickle down at its finest. Really nice chart reads all the way across the board. And then Miss Debbie, weak triggers into resistance. You're like, I hope it works. And it did. And that's just taking care of a strong trend and saying it's probably going to go to the next fib. They love to hit the furthest, the edges. Lower probability, especially when you get a third divergence in the same price range with the smalls below the large. And it just ends up going anywhere. And that's nothing more than taking advantage of a strong trend. Maybe a little lucky on that one. But that market is just grinding up, and you took advantage of the grind. And you took advantage from areas. So I'm not mad at you for it. That one's going to run you over every now and then. Weak triggers into a fib is like the epitome of the market may reverse. And then Gary, not a divergence PSO, just a divergence. But you do end up with momentum directly into a termination condition from a bad bottom. But you let it clear with the momentum, great patience, and take it out at the trouble spot. Yeah, I know you are. I know you're watching that larger chart too. But when we're in a class, I got to point out the good and the bad. And then Gary, the only thing that I would want to point out on this one is that is not a PSO. That is just a divergence, a loss of momentum. And in order for this to be a pivot stop out, just so you know that it's not a termination condition. It's nothing more than a loss of momentum from the middle of nowhere, which makes your target brilliant, by the way. But just for a terminology for my new kids, pivot stop outs at lows, I don't know. Do you have it set up, Joel, to print on every chart? That would be my first question. Is your range chart the same market? All right, check it out. So this is how we get a pivot stop out, guys, down at the bottom. I'm not even sure if Gary's still in here, but this is for all of you guys because I think that termination is important. When the market comes down and creates a pivot and there's a loss of momentum, okay, right on. This is just a loss of momentum. That's all it is. And when price reaches the divergence low and the triggers remain above, then I have a pivot stop out. This is my pivot. This is the stop out. Does that make sense, Gary? So on your chart, I don't know where it went. Where'd your chart go? I think I opened up on your chart. Hold on. So much stuff. Nope, that's not it. There it is. Just a pivot, guys. This is just a pivot. This is weak triggers and divergence, which is awesome. That's a huge sign that we're probably going back to the mid-band. A PSO takes time. See over here to the left? See that right there where price came back to the divergence low, exceeded it, and then went up? That's a pivot stop out. So you have to create the pivot, and then you have to fail at the pivot to create a pivot stop out. Thank you, Diamond Dave, for the help on that one. And then, guys, I want to show in one thing too, because I want the good with the bad. Weak triggers, divergence says, whoop, we're slowing down. Second higher divergence says, man, we're really slowing down. And it lets me know that we're probably getting at least to the mid-band. Gary says, I've got odds favorable momentum, odds favorable momentum. And sure enough, odds favorable momentum I'm just going to grab it up there. I love everything about this trade, Gary. And guys, when I point out things like it's not a pivot stop out, I'm not coming after you. That's just me making sure everybody understands the terminology. All right, Grant. That's the exact same trade, but Grant had a fib that you didn't, Gary. That's about the best look ever. Weak triggers into Fibonacci support. Grant gets a third higher divergence in on the right. God, I love this. What market was yours, Gary? Yours was crude too. You guys have two very different looks. Grant, you're an hour behind Gary. You're still in Central Time, right? On your charts. So you guys have a different midnight, so you're going to get different fibs. Your fib's 1 here. Beautiful. Taking momentum off the termination, clearing the trouble, out at trouble. Grant, beautiful. I hope you have 20 pictures of that in your trading plan folder, because that is outstanding. And for those of you that are new, this is what we do every day, is we just come through and we look and we talk. Cav, termination creates a reversal, gives momentum directly into pink 1-to-1s. You do take the entry and you're out before that second divergence. I love it. And this is the biggest thing for me, is watch out for pink 1-to-1s on the NASDAQ. They can create a bounce. So I love your entry. Absolutely beautiful. I love your exit. Let's just get paid quick and wait and see what these do. Just beautiful. And you're absolutely right. It's a good bottom because no triggers broke. Way to take the lessons from earlier in the week and really capitalizing on them. Nice job, Cav. All right, who's next? And guys, remember, if you have a question about somebody else's chart, please feel free to ask it. Gary, it's just a trend trade. Just taking advantage of everything going up. Looks like you had one here too. Just a trend trade, momentum trade, trend trade. Why not make money 20 times on the way up? Nice job. All right, Diamond Dave, let's get you a lesson. You say this confused you. Large chart messes with your brain. You ready for me to fix you, Diamond Dave? And here's the first thing. And if you don't mind answering in the room, just so I know, what confuses you about red bars and a green background? Trying to decide which way to go? I'm going to make it super simple. And Diamond Dave, okay. I'm going to give you the Sunday school answer. And not everybody likes the Sunday school answer. So you're confusing the color of the background with whether or not you have a trade. So let's go through it. And I don't know where you were looking for a trade, but if the background is green, you're saying to yourself, I'm only looking for rules to be met for high probability trend trades long, right? Assuming you're a high probability trend trader, I don't know that you are. So let's look at it. We had a termination. Dig it. Nice. Good. So let's look for momentum, Dave. Do you have momentum to the upside? I noticed that your large triggers never rolled, that they continue down. I also noticed that off of support, it spiked all the way up to the mid-band and the large triggers didn't follow. Are you comfortable with the gap theory, David? Cool. So the background is green, and the only reason the background is green, the only reason It did, all the way up to the midband area, and then it came back down. Why did it go up? It went up because it hit a termination condition. All the triggers stayed above, and there was a reaction. The reaction pushed it up. What market is this? Is this gold, maybe? RTY? All right. Boom, 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 boom. You know I got RTY. Let's see if we can find it real quick. What time was your picture? I can't see timestamps. 2089. I think this was it right here, right? But you had a fib here. So let's give you a fib. I've got fibs that you don't, Dave, and it may be because I've cleaned out different reasons. Maybe it's that one, 938. That looks pretty familiar. Cool. So check it out. And let's go ahead and do both charts because I want you to see the whole shebang on this one. So this is it right there. The market's coming down. No, it was looking in the wrong spot. Market's coming down and triggers are weakening, right? And what do weak triggers mean? It means that we're losing that odds favorable momentum. So we're just going to go through it. When you weakened your triggers, all right, and the momentum started to push up a little bit. And you can see the loss of momentum on your small chart as well, right? That divergence prints, the triggers are weakened, and it starts to push up. When these small triggers start to get above the large, that's what paints the background green. So just because the background is green doesn't mean that it's time to look for a long trade. Does that make sense? It doesn't mean that the market's going to reverse and go the other direction. The only thing that it really means is that your small triggers have gotten above the large triggers, and that's what paints the background green. And it's an awesome safeguard, David, because it keeps you from trying that short against that immediate momentum. Does that make sense so far? So you're not going short, right? Because you don't have momentum to the downside. You're not going long because you don't have momentum to the upside. And this background color is just a reflection of the triggers. But do you see how the trigger lines don't agree? And you're just like, damn it, I can't really do anything. The background's green, but my rules aren't met. And that's all that's going on here is your background is green because of the triggers, but your rules aren't met. And then when the price pushes all the way up here to 95-ish, notice that your large triggers don't follow. The large triggers say, you know what, Dave? I know we painted it green, but look how red I'm staying. I still don't have odds favorable momentum to the upside. No reason to look for a long trade. But I'm not going to fight these small triggers. That's the immediate momentum. I don't have a short trade. And then what happens? The gap theory comes into play. And I think right around here, you end up taking a short. Am I right there? Let me see where you took your short. Boom, 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 boom. So right here, Diamond Dave says, the gap theory is in effect. It's a huge downtrend. It's not coming from an area. The mid-band's behaving as a termination condition. And now my small chart, everything is freaking red. I'm going short, at least back down to these large triggers. Does that sound about right, Diamond Dave? And I don't know how long you took it down, but let's go into the next pattern. When that doesn't make the key area and the midband behaves as a termination condition, see it again right here. That's your pattern, brother. They're trying to get to that next fib. which means that your short is a momentum style continuation of the trend. That divergence, this divergence, no areas inside of favorable large triggers. It wasn't a rules-based short. And then once everything rolls again, there's your next short to get down to the fib. Does that help a little bit, David? Understanding that just because it's green doesn't mean that there's a trade the other direction. Literally, that background kept you from trying a doomed long because it had you thinking, but you never got momentum. Rule number 1 kept you out of the trade. Rule number 2, mid-band acting as a termination condition, kept you out of the long. And then a little pattern recognition. Bad bottom, mid-band as a termination, down it goes to the fib. Bad bottom, mid-band as a termination, down it goes to the fib. And I'm not sure how often that happens, but let's see if we can get an idea. Bad top, mid-band, bad top, mid-band a little bit deeper, continues up. Bad top, support. This was kind of where it began to change. Bad bottom goes to the mid-band, pulls back. Once it clears everything, they're trying to go up. And you'll see bad tops all the way up until they finally get it and pull it down. Does that help a little bit? The color gets you thinking, right? Right now it says red. Right now I'm thinking shorts. I've got momentum. I like momentum, but I don't have a clear path. Does that make sense, David? The direction is down. The momentum is down, but the rules still aren't met. And that's the difference between a read and your rules. Scroll back to 939. The direction is up, but the momentum is not. And because we reach the midband and the large triggers are a full bar away, the path isn't clear either. There's just no rules met. That one might have gotten all of us. The path is clear, the momentum is down. There's your pullback. This is your easy one. Everything agrees. So the color is just the beginning. The color is just the beginning. But you still have to wait for rules to be met. Yeah, that's what we're looking at right now. Oh, there we go. 0324, Rob. So Dave, I hope that helps, man. The color is good, right? The momentum is good, but the rules aren't met. So even though the color is green, there's still not a long trade here. And even though the color is red, there's still not a short trade. So go through the process of rules met, rules not met, and put that on top of the read. And what you'll find is that life gets a lot easier and a little less confusing when you keep it simple. I hope that helped. Pedro, go to, you're welcome. And man, keep those questions coming. You've been around a while, but I learn stuff every day. So I don't want you guys to feel like because you've been with us a while that you can't jump in and be a part of this classroom. I really want you guys in this room because you guys ask the best questions. Hey, Pedro, there is the resources page link. You can just download the indicators and it'll give you all of them. It'll give you every workspace that Nexgen provides. And that's kind of an easy way because it gives you a little re-up. But I'll give you my workspace real quick. Hold on just one second. Where's my RTY workspace? It's got to be in here. S&P, NASDAQ Mini, there it is, Mini Russell. So Pedro, there's my RTY workspace. You can have it. You just have to save it into Documents, NinjaTrader 8, Workspaces. Drop it in there. You'll have to extract it into the Workspaces folder, and it'll work. And Diamond Dave's right, is you can just change the Change it to RTY0324 and then right click and put save as RTY so that you don't overwrite your crude. Good stuff. And David, thank you for that question. I think that was a pretty awesome question. Just because the color's up doesn't mean that there's a trade yet. Pretty good lesson. And then Haji, everything says up. The path is clear. You take a pullback to support inside of favorable large triggers. You get out, you get out. And you say you managed it tight due to so-so momentum, right? I like that. Way to understand that it's not high probability. So you're just getting paid. Great trade, Haji. David, when you know exactly what you're looking for, and this is the key to trading the NASDAQ, is you have to know exactly what you're looking for. And you have to know exactly what you're looking for in about 2 seconds because it moves so fast. I couldn't trade the NASDAQ at all. I couldn't even look at the NASDAQ. It gave me motion sickness. But once I put a plan in place, it got easier. I like RTY a lot, but the volume is a lot lower. But it's super smooth, super smooth. I agree with that. Haji, great work, man. Not the best momentum, but a clear path and the perfect entry, medium probability trade, and you executed flawlessly. Can't find a fault in that trade anywhere. And then Miss Debbie, you love weak triggers into fibs, and it takes you in. And then the cool thing is, guys, is Miss Debbie knows how to use a larger time frame. And this chart says, guess what? Here we go to the upside. So she said, let me just refine my entry. I love that trade, Debbie. You can add time frames, guys. You just got to know what you're looking for. Arnie. All right, Arnie, I know you're new, but are you suggesting that with all this momentum and everything going up, that you don't have a problem taking a pullback to an area, and since it's the NASDAQ, you don't want to fight the triggers and you want to get in on the correct side and get out of troubles? 45K down. I got to tell you, your entry here is amazing because these one-to-ones could have stopped the market. They're at 68.50 and it's coming right from those one-to-ones. So that little patience of getting on the correct side paid dividends to get you to the trouble spot. And the cool thing is if you never got that close on the correct side, if those one-to-ones reversed the market, you would have never been into the trade. Outstanding trading, Arnie. And then Haji again. Everything says up, exact same trade. He risked it at the mid-band directly into a termination condition. That's the one thing I want you guys to realize, right? Not crazy about this trade, even though it won strongest triggers. And then Haji, hope you were listening. With the NASDAQ, if it's a little iffy on a term, it's okay to wait for that close because by the time you get here, more often than not, if it's going to go, it's going to go. Both of them are beautiful trades, different entries. One's a little more conservative than the other. All right, VM Tech. Let's see. You went long into a termination. And you held for 37 days as everything turned against you and told you the market was going down. And then you got paid up here at resistance. VM Tech, I will never tell you how to trade. But if you're at 06.25 and it goes down to 74.25, that is $26.32, $640 worth of risk. If you end up getting stopped out of this one, you're going to blow Apex accounts on day one, always. trading directly into terminations, holding on, getting lucky, and I'm not smacking your wrist. You can do whatever you want to do. Don't let this $590 fool you. That's a very difficult way to make money. I mean, why even have charts, right? This isn't a strong bottom. There's no confidence here. You have momentum against it with the small triggers below it coming from a termination condition that reversed the market. I'm not going to lie to you. I would almost be inclined to look for a short trade here. I think you got very, very lucky. And I love it when you guys get lucky. But building a plan around that sort of just absolutely ridiculous risk, I don't know. Maybe someone other than me can say it. I know. So let's do this. Just to hear me out. I'm not even going to look at your entry chart. The trend is up. The momentum is up. Rule number 2 says that if price reaches resistance and none of the triggers break, that there is no long trade. That's a termination and it may reverse the market. It may create a bounce. And I want you to see what this perfect rule number 2 not being met did. It reversed the market and it gave you odds favorable momentum to the downside, and it even pushed the small triggers through. So while you're long, I have a strong top, which is the precursor to the best short trade I can take. While you're still long, I have strong triggers down from a strong top, which is the best condition possible for looking for a short trade. And while you're still holding this long, I have smalls through support from a good top with momentum, which is the best look for a 50-50 short to continue from the termination condition. And this is just the chart read. This is all that I see. So I like the momentum. I really do. But there has to be a point where you say to yourself, it's easier to go with the direction. There has to be a point where you say to yourself, it's easier to go with the momentum. And I wouldn't be surprised to see somebody show me a short trade from in here. Does that make sense? Hey, good morning, Cindy. Got to keep those pearly whites pearly. So VM Tech, I never tell anybody how to trade. I don't give trading advice, not at all. All I do is I help you read charts. And the chart read on this one said that keeping your money at risk through all of this is definitely not a recipe for long-term success. This is how accounts get blown out. And I know that you're relatively new with me, and I noticed that your SIM account is already at $85,000, which means you're down at least 15 grand. Absolutely. So keep it simple in the beginning. Trade with momentum and a clear path. Let's use that pullback. And more importantly, let's keep you focused on intelligent stops right now, because that seems to be your thing. And it makes it easier to hold on to the money you make. And the easiest way to do that is with rule number 3, is with that great entry. Because if you only enter on pullbacks to the area, you know exactly where the market shouldn't go. The market shouldn't go beyond that area. So instead of risking $370 or $640, whatever it was, you're risking like $150. So if it doesn't work out, you can take an exit. And then you can take an exit and just wait for the next best trade. So just something to think about. And thank you for sharing. And I hope that, guys, when I review your charts and I don't give you the answers that you wanted, I hope you understand that it's designed to help you find consistency. I think that it'll help you a lot because your chart reads on momentum are fantastic. And then we got to make sure that you're understanding termination conditions, right? No reason to go short into this blue fib, and definitely no reason to hold on to it forever. And that's where rule number 2 is going to pay huge dividends. Gino, are you asking me if my rules are met? So let's see. I have a good bottom. I like it. I have momentum. That's pretty cool. And I've got small triggers that are only eking their head above 1-to-1s, barely through it at all. And I'm coming off of pink 1-to-1s. And I have divergence. My rules aren't met, Gino. And the small triggers are below the reversal bar marker. My rules are even more not met. Oh, look at that. I just kept from getting my ass kicked having a set of rules. Pretty cool, right? Well, you asked on an incomplete thought, right? So when divergence printed, you said no dice, huh? And look how far it can go. I never fight those triggers. I like it. And Gino, that's kind of next level, right? You're like, I'm digging it. I like the momentum. I like the good top. It looks good. Let's talk about it. Up, divergence printed. Broke my rules. Not taking the trade. I love it, dude. That's how you get to where you want to be. 10:31 a.m. Dwight, I'm sorry. Guys, I will admit is sometimes I'm looking for pictures. So if I ever miss just a posted question, make sure that you point it out. Oh, I answered it right then in the moment. I guess you missed my answer. $5. $5. How much is a tick in NASDAQ futures? $5. So Google is freaking amazing. Like every answer you could ever hope for. So Gino, you're not where you want to be or should be at all. What's holding you back? You're welcome, Dwight. What's holding you back? You? Do you have solid rules? Do you have them written down on a piece of paper so that you can make sure you're following them before you take a trade? You think so? That's not an I think so. You either have them or you don't, right? Are you pregnant? I think so. I don't know. No, you either are or you're not. Do you have them written out? I had someone tell me once, if you don't have a written plan, you don't have a plan. So if you have it in your head, then you're going to break it all the time, right? If you're not looking at what it takes to get you into the market, you're going to break them all the time because you're going to trade what you want to have happen rather than what is happening. And then once you enter the trade, all right, so when things go bad, you go back to the kiss. Perfect. I love that. So if you're not where you want to be or should be, you're on the KISS plan? So right now you're on the KISS plan. I love it. So let me give you a challenge, Gino. And I used to do this when I was a personal trainer. 5 days. 5 days on the KISS plan. Just whatever you have to do to stick to the rules. Just 5 days and let me know what your results are. Most people tell me that they end up in the 70, 75, 80 range percent winners. But here's the challenge is you're going to want to take this trade because of this momentum, right? And you're going to get in at the mid band and you're going to lose and you're going to get frustrated. And then you're going to jump in again right here because you're still frustrated. And then on this down bar, you're going to absolutely crap yourself and take a loss. And then it's going to start to go up. And you're just going to be mad, and you're going to try and take it right here, hoping that this area breaks the way that one broke, and you're going to take another loser. Has anyone ever done that but me? Anybody? So one of the hardest things about being a day trader, guys, is that you have to accept the fact that all the money isn't yours. That all the money isn't yours. That every move doesn't have to be yours. And if you're able to, and let's use the NASDAQ as an example. If you're able to capitalize from here to here, and you don't catch any of this or any of this, but you're able to capitalize from here to here, and you don't take any of these, and you're able to grab this one from here to here, and you miss all of this move because your rules weren't met, but you were able to capitalize from here to here. If you took 4 trades that were so freaking high probability, amazing, nothing wrong with them, if you took 4 trades where every indicator agreed for the trade, and that's all you did every day, is take the high probability trend trade, and you made, let's do this, you went full profit on one of the trades and made $300. The other 2 trades, you only made $100 each that you won. And we're taking 4 trades here, right? So I made $300 on the first. Between the next 2 trades, I made $200 total. And then I gave back $150 because my stop was in the right place. So 5, what is that? So I made $350 a day. That's it. That's all I could muster this day. If that's the best I could do every day, ladies and gentlemen, that's a $72,000 USD. $72,000 from only 1 trade going, 2 getting stopped out break even, and 1 losing. 70% winners. $72,000. Do you need to be in every move to make money? No. I hope support breaks. A lot of losers. And when do you take this trade, guys? When support breaks here. And guys, this is a very important lesson. When you see price bounce off of support and it breaks anyway, you're more inclined to take this trade. Would everybody agree to that? My rules weren't met and it won anyway, so now I'm going to break my rules here. And there it goes. My rules weren't met and it won anyway, so I'm going to take the long here. Damn it! You don't get to pick. So currently real time, yellow 1-to-1s. The triggers went through. It has the potential to break, but when it hit resistance and the triggers didn't break, that's textbook termination condition. That's no more long trades, which should keep you from trying this one. And then 3 divergences in the same price range just confirms it even more. So what you run into, guys, and I'm telling you this because I've done it, is every now and then, weak triggers is going to continue up. Every now and then it's going to. But let's go back and look. Weak triggers, deeper push. Weak triggers, deeper push. Weak triggers, deeper push. Weak triggers, bigger retracement. Do you guys see how this works? Weaker triggers. So what we're doing is we're not trading based on the one that goes. There's another, weak triggers, bigger retracement. So that is, what is that? That's less than 2 hours worth of market time. And we just looked at 7 or 8 examples where weak triggers, not in an area, reverse the market. Give me a Y if you heard what I said. Now let's go see Weak triggers gives it a little push, right? Weak triggers and a clear path gets it down. But which is more statistically advantageous? Strong triggers, tails continue. Strong triggers, tails continue. Strong triggers, tails continue. Which one do you want to risk your money on, guys? The one that says, hey, Cindy, it's going to take an act of God to stop this market, or the one that says, meh, whatever, right? And then you couple that insanely great advantage of momentum with the easiest rules ever that say, don't take this trade. It's not your money. Don't take this trade. It's not your money. Not my money, guys. That's a phrase you've got to get good at. And then the flip side is if you're going to be willing to say not my money, and new users, you're going to say it all the time because you're going to panic. You have to know when it is your money. You have to know exactly what it looks like when it's time for you to pull the trigger without hesitation. And if you're not going back and circling tails, if you're not taking pictures of high probability trend trades, if you're not taking all of my hard work and studying it and saying to yourself, this is exactly what it has to look like on the perfect 50-50, right? Then you're never going to get that confidence and you're going to keep making mistakes. And you're going to hope. Strong triggers, support, weak triggers. Oh my gosh. Is this that picture again, guys? Look at that. So, Jen, that's a great question, and I'm going to answer it with just such a Sunday school answer once again. I want you to allow it to be as easy as rules met or rules not met, right? So you have to know your rules. Jen, I'm assuming they have stoplights in London, red and green. Is that pretty universal? I really don't know, but I'm assuming they do because I'm an American and we think everything is like what we do. So Jen, when you're at a red light, do you go anyway? No, right? That's a pretty easy one, right? Because you know that if you go through that red light, you run the risk of being killed or hurt or anywhere or getting caught. You don't care about the consequences. You just don't want to go to jail. But it's the same thing, right? This is a red light. Your rules not being met have to be a red light for you. But Jen, have you ever sat at a red light and said, shit, this light may never turn green? I know in the past they always turn green, but this could be the one. This could be the one that just doesn't. I better run this red light. Has anyone ever said that at a red light? Of course not. But sometimes you're just not patient. Eventually, the light might turn green. Or weak triggers at resistance may blow you right through a midband inside of favorable large triggers. Gary, there are no red lights on a country road at night. Otherwise, it's not a country road, right? So guys, the whole idea for the brand new user, and I know that I'm beating a dead horse and broken record and everything that you want to call it. The whole idea is that you become so comfortable through study and simulation and class feedback and practice, you become so enthralled with the idea that strong triggers and a clear path and a pullback to support inside of favorable large triggers is more likely to take you to your success than trading into termination conditions, than trading without momentum. Because if you take 100 trades where the rules are met, you're probably going to win 70 to 80 of them. So when everything is up and the area is clear, I don't have the best momentum, but I do have a clear path. And I do have areas inside of favorable large triggers, and my patience not getting chewed up says, well, Mark, you can take a medium probability trade here. But since you don't have the advantage of momentum, what do you say we go ahead and manage aggressively if it gives us the order. What do you say that we don't fight the small triggers on the NASDAQ? How about if maybe we don't just jump into one-to-ones, but we force the pullback. We make them come get us at the absolute best spot. And it really can be that simple, I promise. But you have to get over the fear of not being in a trade. You have to get over the fear of watching it go from 68.50 to 85. And even though your rules weren't met, you've got to be okay saying it's just not my money. Hey, Grant, take care, man. Hope you have a great afternoon, bud. Great trading. Great trading. Have you ever absolutely gotten slaughtered one day? And when you go back and look at it, you're like, holy smokes, I broke my rules so many times. I had weak triggers going into resistance. That's not my trade. And then on that same token, gone back on one of the most successful days you've ever had, and you realize that every one of them fit your rules and every one of them had advantages. And you're like, wow, that felt easy. That was effortless. I didn't take 50 trades. I took 5 trades. And I made more money than I made when I took 25 trades the day before. And guys, this is part of the marathon. This is part of the process, is just repetition, creating confidence, getting comfortable with the idea that you don't have to be in every move to be successful. I've worked through it myself, and I'll tell you what, some days I still work through it. But everything that I've screwed up, we all do, Gino. We all do. I blew out an account earlier this week. And do you know why? Because even though my large triggers were down, I went long. Or even though my small triggers were up, I said, well, I think it should go short. Opinions kill you guys. My biggest challenge is expecting areas to hold, and they don't. So when I'm successful, I've got nothing in the way. And when I've got nothing in the way, life is really easy. Better with strong versus weak. Everything that we do, Jen, revolves around strong triggers. Everything revolves around strong triggers. When you have strong triggers, it's likely to continue up. When you have strong triggers, it's likely to continue down. And then we just put a couple more factors in there to give you the warm fuzzies to make you feel good about it. But again, for like the 10th time here, you have to know what it takes to get in order to get in. And if you don't have what it takes to get in, you have to be okay saying, I'm just not going to get in right now. And that's the hardest thing. And I'm not going to lie to you and tell you that that's easy. The psychology of trading is harder than learning the patterns. But eventually you build trust, and eventually you stick around and you're like, oh, yeah, that makes sense. And you really focus on it. Missing trades because the rules aren't met. And the worst is when it goes anyway, right? When it goes anyway, when it doesn't meet your rules and it does exactly what you thought it was going to do anyway, and you're like, oh, I knew it. And then you feel that sense of loss. And that's okay. Loss never killed anybody. But that sense of loss in a lot of us drives that motivation to revenge trade. Well, I missed this trade. It didn't fit my rules, but it did what I wanted it to do anyway. So now I'm going to take 10 more trades that don't fit the rules, and I'm going to get my money back. Because really, F these guys. Anybody other than me? Am I the only one that does that or has done that? Clearly, the market doesn't know how brilliant I am. Let me prove to it how smart I am by taking all the trades that I shouldn't take, because I'm going to show that damn market. So let's go back to my soapbox real quick, guys. If you really want to minimize your learning curve, get your pictures. That's it, Bob. It doesn't cost you anything to stay flat. Guys, get your pictures in class. So I'm gonna say names, and I apologize if you feel called out. Gino, if you're not winning the way you want to win, give me a chance to help, brother. Put everything that you do in the room, right? Because what you don't realize, and this happened for me, is when I was trading and making mistakes, I knew that I was trading in determination conditions. I had no doubt in my mind I was trading in determination conditions. I understood the rule, but I didn't believe in the moment that they were likely to hold. I had zero belief that that area would ever stop the market. And when I started posting my pictures in my brother's room, when I finally sacked up and made it happen, he talked me through the process. He said, all right, let's look at a couple different factors. Let's look at where the market is coming from. Let's look at where the triggers are in relationship to the area. Let's talk about these factors that come together, and let's get you to a point to where you stop trading into areas that may stop the market. Let's stop trading into one-to-ones with divergence, right? Because Mark, this is taking your money. And more importantly, guys, and this is my weakness. Let's stop going short at resistance just because it's a bad bottom against all the momentum. But until I posted in the room, guys, I was making the same mistake over and over and over again. And you may not recognize your patterns to correct them, but I promise you that I will. I will recognize your patterns. Gino, remember when we figured out that you traded from triggers and not areas? And we had those great conversations and then you fixed it? And then you probably broke it again, which is okay. But this is what we do. And when I find out that you're holding for too long, we talk about it. I don't tell you stop doing it, but I will tell you that is not a recipe for success. That's a difficult way to make a living. Or if you enter too early. Didn't we have a great talk yesterday about the difference between getting early and getting in late and the risk associated and all those different things? And what happens, guys, is you get this awesome repetition that gets you where to want to be. And since nobody's posting pictures, I'm really just kind of going through it over and over. Guys, this is a termination condition. It created a bounce. It's back in, but it's still a termination condition. And Gino, you said it's a short, right? Were your rules met? Where were you coming from? Good top or bad top? Can we go through it? Will you guys walk through this with me? And why is that a good top? Is it because I see one divergence. Am I missing something? Large chart, the only termination condition? No. Good tops and bottoms, so here we go. Thank you for the lesson. Good tops and bottoms happen on the large chart, period. Good tops and bottoms happen on the large chart. On the small chart, you did have 3 divergences. And what did that say? That said don't go long right here. Is everybody with me on that? 3 divergences said don't go long. It's a termination condition. That's all it is. A good top or bottom comes from an area, guys. So I have a loss of momentum from the middle of nowhere. And let me go again. If there were a fib right here and the smalls eked above and 3 divergences, that may confirm a little overrun at a key area. But guys, this is swinging in the middle and nothing. That's in just the pit of despair. There's nothing going on. So we have to believe that this is a bad top. It is not a no triggers through termination condition. That's horrible spelling. That reversed the market. So far, so good, Gino? And that's okay. That's not a deal breaker. And then the next thing we do is we look at our trigger lines, right? And if we annotate the chart, we say this is strong triggers. And then if you really want to cement the lesson, this means momentum. This rocks. I love this. Whatever you need to put on there to believe that momentum is amazing. But then you have the burden of saying this is 1-to-1s, no triggers through, no clear path, termination condition, brick wall, financial suicide. How's that for a description of what happens when price reaches yellow 1-to-1s and the triggers don't break? And here's the deal, guys, is it doesn't mean no shorts ever. It means no shorts yet. So what has to happen, Gino, to look for shorts? I want to see my small triggers get through the area. I want to see the potential to break. And once my small triggers get through the area, if I get a pullback, maybe I take it, or maybe I let it go a little further. But this 1-to-1 says cool your jets. It's a 50-50 with divergence from a 1-to-1. There's a good chance I'm about to get my ass kicked. But do you see how you can let it all come together, right? My small triggers were still down. I love it. But this is a 50-50 with divergence from 1-to-1s. This is a low probability trade, which means that I should take profits if I'm willing to take it at the first sign of trouble. But it still doesn't fit the rules. And gosh, I hope it comes up and loses. I hope it comes up and loses. Get up there. Come stop me out. Do not reward me for breaking rules is what I'm hoping. This is a bad top. This is a 50-50 on two areas. This is divergence on a 50-50 from two areas from a bad top. If only I had something that said this trade is likely to lose more than it wins. If only I had a simple set of rules that said, damn it, Mark, why are you risking your money because you feel like you missed out somewhere? And guys, I want you to realize I took that with the intention of losing. Because the pattern of bad top on a 50-50 with divergence, it sucks, no matter what you want to have happen. But until you lose that one a couple times and drop it in the room, you don't understand that. And I hope you guys know me well enough to know that that's not my trade. There is no way that I'm taking that trade. If anything, I'm looking for the apology trade. There's your momentum style trade, momentum traders. When a 50-50 fails and the small triggers are up and the smalls break and it pulls back to support, that's a low risk first shot at going the other direction, but it's still a termination, isn't it? And it's still the wrong direction. No, I would never go long against the big chart. Gino, what I'm showing you is that you can get your ass kicked every direction by breaking rules. How many more rules do you want me to break? Every trigger line is below support or below the fib. I can't go long. My large are down. I can't go long. My background's red. I can't go long. The momentum worked, but that's not my trade. That's not the KISS plan. I need my smalls above the fib. I need momentum. So what I'm doing is I'm trying to break every rule. And maybe I'm going, oh, but my large triggers are still down, right? Maybe I should go short. Oh no, now it's green. And if you took the momentum trade, there were other reasons. But you've got to have a reason, right? Now I've got momentum in a 50-50. And now I'm getting areas down here at trigger lines. It'll all come together, guys. So Cindy, thank you for saying that. Let's talk about something. That's the bad top, right? And all the bad top tells me is that when I get to the mid-band area and it fails, it's more likely to go up. Which is why this 50-50 loses more than it wins. Does that make sense? So this doesn't count as a weak bottom. This counts as a failure. of the sellers trying to push down from a bad top, which means that there's a pretty good chance that the buyers were trying to get to here and the sellers stunted their growth just for a second. Does that make sense? But that's a chart read, guys. There's a bad top, mid-band, comes a little lower, and then they finish the move. That's just a chart read. The second half of the chart read is waiting for my rules to be met. Waiting for strong triggers. When I say, so it was an uptrend, right? It was a good bottom that pushed up. The triggers never rolled. It pushed up more. It didn't come to an area. Right into support that never broke. The same way it never broke here. The same way it never broke here. Support for the win, support for the win, support for the win. They never reached a key area, Cindy. They never made it to a fib. They never made it to one-to-ones. They never made it anywhere. And now I've got a 50-50 trade with odds favorable momentum. It does have a divergence. My small triggers are up there.
Order canceled.
Can we try this long? Do you see how there's a difference between a chart read and trade rules being met? Right now I'm 50-50 with a divergence. Are your rules met? But this is where people start to form opinions. They start to jump in. They start to hope and believe that it has to go. And it's okay. I've lost a lot on this look too. Should have never lost this one. That's as sexy as all get out. But the pattern that when a bad top fails at a 50-50, they're probably going to try to push up higher. Guys, that's a pattern that repeats itself all the time. And where's the trouble in the way? 93 is our first trouble spot. And they got it. But now the smalls are above. The large are not. It's 50-50. I do have areas inside of favorable large triggers, but my small triggers are below the reversal bar marker. And on the NASDAQ, for me, that says let's hold off a second. Let's see what happens when we get closer, because it will change just a little bit. So I'll keep my order in line. And they're still up. If they don't turn, I like it. If they turn against me, though, I'm not taking the trade. What if you took that 50-50 but planned to get out before divergence? There was never an entry for the 50-50. Haji, where would you have entered? Off the triggers? I don't know. Then I guess I would have made money. Huh. Now I'm 50-50 here, but my small triggers aren't through my reversal bar marker. Why not just get paid at the pink line and then wait for the next trade, right? And I guess that's what I'm trying to say here, guys, is just get paid. Just get paid, and who cares what happens next? Let's see if these small triggers behave as resistance. Have you guys seen that one before? Divergence on a 50-50. Small triggers are down. How often do they act as resistance? It may go up. But you've got to give yourself the highest advantage, guys. And that's all I'm trying to say here is it's your money. Protect it. Protect it with strong triggers. Protect it with proper stops. Protect it with a clear path. You will learn your rules well enough to know when it's okay to break them. I promise you, you will. But do you see how when it hit the area, the small triggers were getting below the reversal bar marker and I chose not to take the trade? This is why, guys. This happens all the time. This is a pattern. This is a NASDAQ pattern for you guys that trade the NASDAQ. And we're just caught in fluctuation because pink lines are where decisions are made. Divergences on a 50-50 lowers the likelihood of success. Fighting the small triggers on the NASDAQ is detrimental to your financial health. We'll see what it does. If it closes above, can we go long? What do you think? Still hasn't. Who wants the long if it closes above? Anybody? Some of you have different rules. What's the read? Momentum, trouble with the potential to break but hasn't broken. Got a divergence. You did have an area. Small triggers are down. Man. Oh, thank goodness for my rules. Thank goodness for my rules. Isn't that awesome? Large chart still says up. Small chart says we may push a little lower. Where is lower, guys? Is it the bottom of the triggers? Is it the bottom of the triggers? Is it the HVA line I have on my other chart? Is it all the way down to support?
Order submitted.
This is where you have to decide, if everything still says up, am I willing to take a close on the correct side of the triggers? At this point, I'm not,
Order canceled.
because I'm on the wrong side of everything. That's it. That's one of the lines, isn't it? Isn't that one of the reasons not to take a trade, Cav? And then divergence solidifies. And this is what you have to say no to, guys. This is what you have to be willing to say, not my trade. It's a pain in the ass, I'm not going to lie. It's tough. Did that make sense to everybody? I mean, we just talked through. When I'm looking to trade the NASDAQ, guys, that's my thought process. What does my large chart say? Do I have a clear path? And if I don't have a clear path, I change my rules for entry. Divergence kills it. 2 divergence is horrible. Small triggers against it absolutely sucks. You're on Central, it showed a fib. Yeah, TLC, you have 2 choices, brother. You can either get on Eastern and we have a better chance of matching if you're able, or you have to just trade your chart. Because we have different midnights, which create different swings. I'm in Central Time as well, but I have my computer set to Eastern because I want to line up with my brother. I want to line up with Nexgen's midnight, not mine. So, and guys, you know what one of my biggest losers is? Is trying to go long at this fib because I believe that I'm still entitled to a long, even though the triggers are down, even though momentum is against me, even though everything says down. I try to go long because I believe that because they didn't give me the long up here, these sons of bitches owe me a long trade to get me to the next area. Anyone else? And then when my long doesn't work, I go short because it's red. And then that gets stopped out. Rats. And I just think to myself, well, all of my triggers are above support. I can't possibly go short. Rule number 2 is not met. I don't have any momentum. I can't possibly go long. None of my rules are met. This not losing money is easy. Not losing money is easy. Making money is even easier if you learn how to not lose money. This has kind of been fun watching it, right? So here we go, expectations again. I am 11:48. Yes, sir, TLC. If you change your computer clock, it may violate your software. You may have to get with Jason. Debbie, have a great afternoon. You may have to get with Jason to reset your software if you change your clock because there's security measures in. So what's the chart read here, guys? It's not a no triggers through termination, which means it is a bad top, which means that if it hits the mid-band and support, it still has the potential to seek out this circle, right? So I let it get to the correct side of the smalls. The large are still going up. Yeah, no worries, TLC. I just don't have anything. I'm on the wrong side of the large. The smalls are down. I don't have a trade yet. Isn't it cool how easy it can be, Miss Cindy? Rules met, rules not met. The light's either red or green. That's it. You either haven't eaten in 45 minutes or you have. Whether or not you jump in the pool has to be dependent on that. So um, it's easiest to follow rules when you know your rules. And I know that sounds silly. It's easiest to follow your rules when you know your rules, when you know what they look like, when you know what advantage they give you, when you know the recipe for a trade, it's easier to follow your rules. It's harder to follow your rules if you're guessing. If you have to process everything for 5 to 10 seconds before you take the trade. And let me show you the other hard part is if you take trend trades, if you take 50-50 trades, if you take HVA trades, if you take momentum trades, if you take counter trend trades, guys, you're thinking of 75 things every time this market is doing anything at all. But if you're keeping it simple in the beginning, what you find is success really isn't that difficult to come up with. Success really isn't that big of a challenge. I still don't have a long trade, even with divergence off support. I need my small triggers to roll at least, guys. I want some indication that the immediate momentum isn't pushing to the downside before I ever consider. Because it's easy to get fluctuations when things don't line up. So, good stuff. Did you guys learn anything today? Oh, Cav, take care, man. Anybody get a little smarter, I hope? Anybody go, oh man, I need to be a little more patient. I need to sit on my hands for a second. I really just got to figure out how to do nothing when there's nothing to do. Guys, I am a colossal pain in your rear end because what I do is I say the same darn thing over and over. And no matter how many times you ask me, Mark, how do I take the long? I say, Michelle, are your rules met? Bob, are your rules met? TLC, are your rules met for the long? If they're not, then you're not taking the long. And eventually you get to that point. My brother told, this is what I'm going to end it with today. My brother told me once, he goes, Mark, eventually you'll get so sick of losing that you'll stop breaking your rules. And he probably said that 2 years ago. And I'll tell you what, it has stuck with me. Eventually you get so sick of losing that you'll follow your rules. So I'm going to encourage everybody in the room, start posting pictures if you're not posting pictures every day. Start giving me the opportunity to help you. If you're struggling, let me help you. If you're curious, let me help you. If you have a problem with any of the concepts, let me help you, guys. I love my job, and I love talking with you, and I love being here every day. That being said, I've got some goals to reach. So